Distinguished guests, ladies and gentlemen, and you are welcome to another Business Days conference, and this is Founders Furnace. So from wherever you are joining us from, I greet you and I thank you for joining us this morning. Founders Furnace has been put together to kind of understand the pattern of how businesses can start from just being registered or just being set up to being a great company. So before I talk about that, let me give you two statistics, especially about Nigerian businesses. One is that it is estimated that small, medium enterprises in Nigeria are about 17 million of them. It is also the case that the number of businesses registered in Nigeria is about 3 million of them. So imagine we have about 3 million, and let's just stay on registered companies alone. It means that the number of companies that are actually great companies in Nigeria are very, very minute compared to this number. However, when you look at those two numbers, the number of successful companies and the numbers of those that are not so successful, you think that there isn't a pattern for success in businesses, but there is a pattern. And I believe that the array of speakers that we have gathered here this morning, most of them founders of their own businesses, and some of them teachers of businesses, they will be telling us how they did it and how they are growing their company and how they expect their company to be great companies. So this is one unique event as a business owner that you don't want to miss. You want to listen very, very carefully about the big ideas that they will share, about the tested theories that they will share, and about the trusted processes that I expect them to share this morning. There's no doubt about it that there's so much entrepreneurs can learn from those that have successfully built great companies. And they can learn from this not only in how they have done it, but in also how they can incorporate some of those development capacity into their home businesses. So I really, really welcome our speakers this morning, and I welcome all our guests this morning, because this is one unique conference dedicated and solely devoted to understanding how we can move from small beginnings to great endings. So I really thank you for joining us this morning, and I want to thank all our speakers in advance for the insights that they will share this morning, and of course, for giving us their time this morning. So from wherever you're joining us, I welcome you, and I really hope that this is what your why. Thank you very much. I'm Okiti, the Managing Director of BusinessDay, and I'll hand over to the moderator. Thank you.
Thank you, Dr. Okiti. Welcome everybody again. We have 4 panels today and a fireside chat. I'll be handing over to the moderator of the first panel in person of Mr. Abayomi Alagbada of Matpekdan Solicitors. Mr. Alagbada, you're welcome to take over.
Thank you very much. Ladies and gentlemen, wherever you are listening or watching from, my name is Yomi Alagbada. I'm a legal practitioner, and my law firm is based in Lagos State, Nigeria. It's my pleasure to be here this morning to be associated with this Business Day conference, and I must say that I'm a bit lucky to have gotten the honor to moderate an event with 2 distinguished women. This first session essentially will be looking at how to start small and end well, end big, and to deal with the issues that will be raised here for us are 2 distinguished women, like I mentioned earlier. First is Ms. Adesua Okumbo Roots, and the second is Levi Novitsky. Levi, I hope, Lexi. Nowitzki. I hope I didn't murder your surname. And if I did, apologies. Apologies for that. Well, I am certain that at the end of the day today, we will have so much to learn. We will have learned a lot. We will have taken part of the experiences that these young ladies will share with us, and then we'll be able to incorporate them into our own businesses, like the moderator and the chairman first mentioned. For starters, I would like to quickly do a summary of the profiles of my panelists. I will start with Adesua. Adesua is the founding partner and managing director of Aroa Capital Management. Aroa Capital Management is one of the few women-owned and led growth, equity, impact, and genderless funds in Africa. Aroa Capital mission is to close the 42 billion SME funding gap and gender investing gap in Africa by generating superior returns for our investors whilst delivering positive social impact and measurable women empowerment outcomes through our fund investments. Aroa invests in small and rapidly growing women impact businesses in Nigeria and in Ghana. Adesua has over 14 years of investment banking, private equity, and structured credit experience in developed and emerging markets. She has coordinated transactions in excess of $5.6 billion. So you can imagine Adesua has immense experience. I can't wait to share in that experience today. And I do hope that all of you listening and watching from wherever, you have the same privilege. So ladies and gentlemen, join me welcome Adesua Okunbo-Rhodes to this session. Adesua, welcome.
Thank you very much. Thank you for the warm welcome.
My second panelist is Lexi Nowitzki, CFA. In 2012, Lexi moved to Nigeria from the United States, believing that the country held immense untapped potential, having an under-penetrated consumer population, expanding infrastructure and online access, and an active entrepreneur network. In 2014, Lexi launched Singularity Investment as the principal investment officer, a venture capital vehicle backed by Darwish Family Office, where she oversees the firm's operations in Africa. Singularity, now known as Equity Venture Partners, lends its relationship and expertise to source extraordinary investment opportunities while supplying the skills, resources, and capital to grow portfolio companies into industry leaders across the continent. Lexi is a board member and advisor to several early-stage companies and faculty member. She's also mentor to several accelerators and startup academics. Lexi, thank you very much for joining us today. It's a pleasure to have you with us.
Yeah, absolutely. Thank you for having me.
Very well. So, having done a brief introduction of our panelists, we'll go straight into the session. As you all know, it's going to be a question and answer session. So what I intend to do is to throw a question at a time to our panelists. I'll be starting with Adesua. Adesua, I have had the opportunity of looking at your LinkedIn profile, and I read that you had, I'm sorry for the issue will be sorted very soon. I read that you boldly states that changing is the face of investing in Africa. Could you tell us about the face of investing in Africa as you saw it, and what happened? What about it you needed to be changed?
Yes,
Can I come again with a question, Adesua?
No, I got your question.
You get the question?
Yes, I got your question.
Very well.
So thank you to Business Day for the invitation and for having me to speak on this esteemed panel and a very important topic. So Aroa is one of the few women-owned and African women-owned private equity funds that are investing on the continent. So when I talk about our mission and my personal mission to change the face of investing in Africa, it's really because Africa right now, in terms of the capital allocators, so the ones that are investing capital, is still being dominated by men. I've counted in the last decade less than 10 women-owned funds that have successfully raised capital, so women-owned and women-run funds that have successfully raised capital and got into a final close for their fund in Africa. Africa is a continent of 54 countries, 1.3 billion people. So in my mind, it's really not good enough when women make up 50% of the African population. So our mission is really to use Arua as a case study to showcase the business case of investing in women as capital allocators, the natural trickle-down effect that has to women in their investment portfolios, either as consumers, which is a rapidly growing market, either as entrepreneurs, either as women in senior management. And there is so much data now from McKinsey, from BCG, from IFC, that showcases that as you invest in women as consumers, as you invest in women as entrepreneurs, as you invest in women in senior management teams, there's a direct correlation to improving profitability, to reducing risk. So it's really an untapped opportunity. And we really see that as we increase the participation of women in the economy, that's really the only way that Africa will reach its full potential, and the only way that Nigeria can reach its full potential. So that's really our mission at Arua. That's my own personal mission as well. That's why I left the comforts of a six-figure salary in London and moved back to Lagos in this hot sun to invest for impact and change the narrative for women when it comes to access to capital. So that's really what I mean by changing the face of investing in Africa. It's making sure that we also have women in the seat of decision-making, women allocating capital, and ensuring the participation of women at all levels of society.
Thank you very much, Adesua. Thank you. I guess I'll do a follow-up question shortly, but let me go to Lexi. Lexi, I need your insight on this. When a venture capitalist asks a startup, how do you intend to scale? What does it really mean?
Yeah, so scale is going from zero, which is revenue of nothing, to being able to reach that J curve where the hard work of building the product and acquiring the first customer is finally being realized through a very efficiently customer acquisition model that's growing revenue multiples year over year. And I think some very strong examples of that are companies like the payments companies, which have really been success stories so far. These companies built an infrastructure that were able to tap a few core customers, prove out the business case, and then that model exponentially grew as it grew market share, because as the platform grows, the more value it has for the end consumer, and you've really just seen those platforms grow exponentially. A non-scalable model, just to contrast it, would be something that requires ongoing heavy investment in things like infrastructure. So for example, if we're just speaking in tech, a lot of telecom infrastructure models are less scalable relative to lean software as a service models in our industry. So for us, it's really the ability to first reach a valuation potential that's at least 10 times our initial investment return. But for the companies, it's the potential in 5 years to reach that $100 million revenue target. And really, those are the sort of business models we invest in.
Very well, Lexi. I appreciate those the response. Adesua, back to you now. In 2019, Arua invested in Wellness Industries. This is a 43-year-old manufacturer of hygienic products, such as Dr. Brown's diapers, Nightingale disposable bed underlays. Over the 2-year period, in what ways has Arua helped Wellness achieve greater scale? Where was the company before you met them, and where are they today?
Yeah, no, that's a very good question. And yes, we're very happy about our investment in Wemi Industries. As you rightly said, we made the investment in October 2019, in line with our gender lens investing criteria. The business provides access to basic hygiene goods for women and girls through their sanitary pad line, through their net maternity pad line. You know, these are very well-known brands in Nigeria, been around for over 40 years. But, you know, it's similar to what happens with most manufacturing businesses in the country, is they typically fund long-term assets with short-term liabilities. And because of that, there's no room for working capital because of, you know, as you pay principal and interest, there's really no room for growth. So when we came in, you know, we were really focused on providing the company with the necessary working capital to ramp up production capacity across their lines and their production lines. And we're very happy today that the business is, you know, well diversified in terms of product mix. We have very strong sales from our baby diaper line, from our adult diaper line, from our baby wipes line. And very happy that, you know, in June or July 2020, we were also able to partner with the MasterCard Foundation. So MasterCard Foundation provided a grant to the company to locally manufacture PPE. So we're now the largest local manufacturer of face masks in West Africa, if not the whole of sub-Saharan Africa. If you check the face mask that you're wearing, if you're in Lagos, I'm sure that they're manufactured by Wemi. So yeah, we've been very happy to be part of the company's growth. You know, the management team, we have a very strong management team, a very strong bench in our team that has really been laser focused on executing on the scale up strategy with our support. So yes, Wemi is a business that has really grown from strength to strength over the last 2 years since we invested, and the best is yet to come. There are a lot of interesting plans that we're working on with the business.
All right, thank you very much. And this is to the members of the audience. You may wish to drop your questions. If you have any question at all for my panelists, there's a platform on this conference, this Zoom conference called Slido platform. You can drop your question through that platform. The code is #FF21. #FF21. So that's the code. Once you enter the code into the platform, it opens up for you, and then you can drop your questions there. It will get to me, and then I can ask the members of my panel. Thank you very much. The Slido, the platform again is Slido platform. Just look for it on your system, and then your code to access it is #FF21. #FF21. So we're expecting your questions so that my panelists can do justice to them. Legacy, let me come back to you. Shortly after the time, American news magazine and website released a list of the 100 most influential companies of 2021. That was done a few days ago. The companies listed included Flutterwave, which your organization happened to be a very big benefactor of. You tweeted your optimism that in 2022, African companies will make up more than 2% of that list. Now, with all the recent bad news stemming from Nigeria and projections that this may be Africa's lost decade, what inspires this bullish sentiment from you?
So, I mean, I think on one side, the challenges that the African continent faces in terms of infrastructure, even lack of access to employment, poor education, sometimes less than high quality governments, is all an opportunity for technology companies to especially outperform. These problems and these challenges are business opportunities for all of these companies that are growing lean models, that are delivering services like financial inclusion, access to education, access to medical care, at a much lower price point and much more accessible to the broader population. Meanwhile, you know, these companies are also providing their own talent creation and education, as well as large amounts of employment opportunities that weren't even in existence, you know, 5 years ago, and that'll only continue to accelerate, in my view. So, given where Africa sits on the broader potential in terms of population and also economic opportunity, I think that 2% prediction is actually quite conservative, and I think we'll only see that grow. International investors are already looking to the continent to invest in these technologies that are growing, models that they've seen done 1 million times all over the rest of the world, and are really seeing now Africa as the last opportunity to be unlocked.
Well, thank you very much. I hope I can share in those optimism of yours, but I mean, who am I? I'm just a lawyer. You are an investment person. So
I think our only
I can trust your judgment.
Yeah, I think our only risk, and apologies, it seems my network isn't very stable, but I think our only risk is the more local headlines that say things like technology is the new oil and gas for Nigeria. And what that means is I think a lot of government officials and regulators only see that as an opportunity to get their own. And they don't necessarily understand all of the nuances of scalable technology companies, and try to over-regulate on one side and overtax and over-control on the other side.
Very well. Like I said, I will share those optimism. Adesua, let's look at your company. Let's look at your organization. Unlike a number of other investors, Arua has not aggressively pursued deals in fintech and in tech generally. Instead, its explicit focus is on consumer goods, healthcare, non-banking financial services, and B2B services sectors. What informs this kind of choice?
Yeah, no, thank you. It's a good question. And I think for us, given the stage that we typically invest in, so we're typically investing in the growth stage of the businesses when businesses have already proven their business model, they're already generating revenue, they already have existing demand for their products and service, already have an existing route to market. A lot of the tech deals that sometimes we see are kind of in the pre-seed or seed stage, and it's really not in line with our risk tolerance today. So we defer to the tech experts like Lexi, who can guide us later when these businesses are ready for kind of more expansion and more growth capital. But for us, we are very bullish on tech-enabled businesses. Tech businesses that are using technology to help alleviate a problem that we face in society, whether that's payments, whether that's borrowing, SME lending, whether that's healthcare. So we are definitely very bullish on tech. It's just that for now, it's some of the deals that we've seen are earlier stage than we would like. And also valuation, I think, is getting a little bit overheated in that space. I think people have seen Paystack, people have seen Flutterwave, and valuations are getting a little bit toppy. So for us, we like businesses within healthcare, businesses in local manufacturing, import substitution, businesses in B2B services, where there is predictable cash flow, there is predictable revenue growth, contracted revenues. This is our risk profile for now. But I think maybe for our next fund, we can be a little bit more adventurous and take more of that early stage risk. But for now, for this first fund, we're very focused on the businesses that have proven their business model, have revenue growth, and are just really looking for incremental capital to scale up.
Very well. I heard the cash flow part loud and clear. I was just wondering, with the emerging artificial intelligence thing all over the place right now, is Arewa putting anything in place to be able to compete? But at some point, if this artificial intelligence stuff becomes the order of the day, you need to be prepared to meet up with the challenges. Is there anything you are putting in place to be able to remain a relevant force if and when it happens?
And I guess when you say artificial intelligence, are you talking about like IoT technology?
Very well, yes.
No, I think that, as I said, we're not shying away from technology completely, because we think in our market, it plays a huge role in helping bridge the gap and helping us converge with more developed markets in terms of services and just quality of life. We're looking for businesses that are kind of later stage for now. But a small portion of our fund will be in tech-enabled businesses for sure. And that's where I look forward to co-investing with people like Lexi, who have taken some of that early stage risk, and then will bring businesses that are ready for Series A and ready for kind of the later stage of their fundraise, and that's where we would come in. So I wouldn't say we're shying away from technology and AI, IoT, or all the interesting things that's happening in technology today, but just not at the pre-seed or seed stage.
All right, thank you very much. So Lexi, I'm back with you.
Great.
At Equity Venture Partners, you guys have backed an illustrious list of big winners, even when it was not obvious that it could go on to change their industries. Soko Insight, M Pharma, Flutterwave, Paystack, Mono, and One Pipe are just a few names. What would you say are the indicators that you look for in a team or a founder before deciding that it has the capacity to achieve scale?
Yeah, so the founder piece of the puzzle is the most important piece. I think 95% of a business success is really in the founding team. And business model matters, ability to acquire customers scalably through partnerships matters, but more than anything, the founding team is really the key differentiator of success. So I think that those factors for us, and look, we've done a lot of work to kind of track both our portfolio and also those deals, that we passed on that have now become successes. And you mentioned AI, and I think it's interesting to think also about how internally we as an investment firm are also tracking our own data to be able to use those tools. AI is maybe a little bit more advanced, but data analytics certainly to pick the top winners going forward. So what we've generally found is, and maybe inherently I understood this earlier, but certainly the cases of success are those where a founding team has worked together before. So largely either that's at a corporate firm, or now you're seeing a lot of teams actually spin out of Paystack and Flutterwave as success stories in starting their own businesses. That they're very personally connected to the problem. So they either come out of the industry where they're trying to solve the problem, or they have a strong emotional attachment to that problem. A great example of that is one of our portfolio companies, M Pharma, where the founder actually had a very close family member die because they couldn't access affordable drugs. And thirdly, I think is certainly whether that's number one, in most cases it is, or a strong number two, that's engineering and technology focused. So in Nigeria specifically, where high quality engineering talent is very expensive, and also retaining that high quality talent is difficult because they're getting offers day after day. It is really important to have that top engineering talent as one of the founders, so they are really aligned to make that business grow. But at the same time, engineering and developer talent needs to be balanced with operational talent as the company scales up. So having somebody that also has those managerial skills and people skills, as well as ability to liaise with the customer and understand what the customer needs.
All right, thank you, Lexi. But there's a question I would like to quickly ask you, and of course, I would seek Adesuwa's intervention also. Now, this question came in through Slido. It says most businesses or startups need access to investments, and many do not still know how to access funds or position their businesses. Do you have any plans to organize training for startups in Nigeria, or are you doing one presently?
So we certainly work as a mentor to other organizations that are doing this quite well. It's not our expertise, but we do try to do some thought leadership pieces, and we've done a series on Tech Cabal, for example, on pitching to a VC. But other organizations include certainly the incubators like Ventures Platform, CC Hub, but also MEST, which is pretty fantastic and has done a really good job, and Founders Factory. Those might be good places for a very early entrepreneur to start looking. Lastly, I would highly recommend the newly formed Nigerian University of Technology Management, which is now taking in candidates and training them. Tuition is completely sponsored, including room and board, and it's high-class education from top professors across the U.S. universities as well as locally. And they're training these STEM students to not only develop their own skills in engineering, but also in business management, and then developing a concept to spin out and actually start approaching VC capital. So these are programs that we're actively involved in.
Thank you very much. Adesua, what do you say?
Yeah, I would kind of echo what Lexi has said. We don't actively do the training or in-house, but we work a lot with other organizations that do, incubators, accelerators that have specific training for what to look for when you're pitching to a VC, what to look for when you're pitching to a PE. So a lot of those organizations like Founders Factory, MEST, they're really good in training companies and startups on what to expect when raising capital. Because I think there is still a very huge knowledge gap there in terms of what to put in your presentation, what to highlight, the VCs that you should be approaching depending on the stage of business that you're in. So there is support out there, but I will also say, do your own research. I think LinkedIn is a very good tool to look for who are the VCs that are active in my region, what type of deals have they done, is this business similar to the stage I'm in, sector that I'm in. So you could also do some of the research yourself as well to begin with, and then seek out those organizations that Lexi has mentioned as well.
Thank you very much. I hope that does justice to the question. So let the question keep coming in. We have a few more minutes to deal with this. Adesua, let me take you on your firm's invest, operate, and empower model. That's the model you thrive on. How do you deliver on all of this model in creating business satisfaction as a firm?
No, that's a good question. So for us, I think it's very important that we're providing more than just money to the entrepreneurs and the companies that we invest in. We're very big on being partners to the companies that we invest in, because it's a private equity investment is a 5-year marriage at least. So making sure that we're partnering with management teams that we have an alignment of interest with to grow the business. So when we talk about operate and empower, it's really helping these businesses get to that next level through capital, but also improving in corporate governance, improving in how they think about finance, how they think about reporting. We also help with strategy and hiring. We also help in making sure that they already start thinking about how to incorporate ESG, so environmental, social, corporate governance, into their kind of mantra and reporting as well. Because I think a lot of these things is what larger investors will expect when we look to exit the investment in a 4 to 6 year horizon. So that's really our mantra: is we want to provide capital, we want to invest, we want to operate, institutionalize these businesses to take them to that next stage of growth, not just with our capital, but with also support. And then we want to empower so that when we're exiting the business is in a much healthier place in terms of financial control, corporate governance, decision making, so that as larger investors come on board, a lot of those things are already in place that they would expect. So that's really our mantra: is we want to showcase to the businesses that we support that we can come with more than just capital. We can come with operational expertise. We can come with support. We can leverage our own networks and relationships to help with market access, client acquisition. That's really what we're bringing to the table.
All right, thank you very much. Let me quickly come back to you. I do know that there are two types of venture capitalists. Some will issue the big checks, hand it over to the startup, and allow the startup to deal with the monies and their development themselves. Other ventures would write the checks in drips, be a part of the management and running of the company, ensure that they get the proper employees, the proper environment, and all of those things. Now, which of the two divide does your company belong to?
Yeah, so I guess I would say there are two types of venture capital firms, but it's more kind of the spray and pray, which is distributing a bunch of small checks across the board to many companies and maybe not taking a very active role, but hoping that one or two of those is the winners that you can continue to back just based on your pro rata rights. The second is being very concentrated in a couple of core positions and having that really belief that those positions that you're backing will be the winners, and focusing and helping those teams grow out their company. We are certainly active customers. We don't like to say that we control it all on the governance side. We never require certain KPIs for our follow-on investment. But of course, we, depending on where the company is based on either their traction, what we've seen the company do relative to our own internal projections, we may or may not continue to invest money into that company. Because, really, we, like most other venture firms, want to really make sure that we have visibility over many companies, but understand that the failure rate across our portfolio is actually quite high, and want to concentrate our capital and our time on those winners. So we certainly never push, we don't believe that we know how to build a company better than any other entrepreneur. We like I mentioned before, the team is 95% of the story for us, and we're backing the team before anybody else. So essentially, we're putting the tools behind that founder to help them scale up and hopefully also save some of their time and negative learnings across the way. So some of that might be, for example, if the team needs to find certain sort of talent, we'll do a talent search for them. We have 2 venture partners that have technical expertise, one in engineering and one in data science. They'll screen candidates. We help them find customers and introduce them to those customers given our network. We help liaise with the regulators on their behalf if they need licenses. But we also do very much, depending on the stage of the company, push things like policies around sexual harassment or diversity or anti-money laundering, data privacy, these sorts of things that are really important from a governance perspective, as well as financial controls as the company scales up. So we're an active investor, but we make sure that the teams that we're partnering with really do want that active involvement.
All right, let me do a follow-up question to that. It has been said that raising capital is one thing, but raising it from the right investor is another.
That is
Now,
so true.
yes. So aside the checks and the reputational capital that the best venture capitalists bring to the table, what else do they bring in their luggage that's good for the startups?
Yeah, so look, I think that as a startup is looking to raise their capital, having just one investor, although it might seem easier from an investor management perspective, actually might not be the best thing for the company, because all of the investors that you put in should be like a puzzle. The same way you're building your team, you need to have investors that are good at particular things that will help you along your journey. So, for example, a US venture capital firm might be important for helping you raise much larger follow-on rounds. It might be important for you to build those relationships in the US because of other security certifications. But an international firm, for example, can't help you win a contract with a local bank or company, for example. And they can't help you find local talent. They don't necessarily understand the local nuances that the companies here are facing. So that's kind of the side that we play. Other venture firms might have the expertise of being sector specific. So a fintech company might look to an investor like Techstars, for example, that just focuses on fintech investments and has a lot of expertise in there and talent that they can help put with the company to help that company grow. More than anything, though, I think that finding the right investors that understand how difficult it is to be an entrepreneur and the setbacks that every single company will go through, and is encouraging rather than aggressive. You don't want an investor that's just going to be burning up all of your time resources, asking for reports, asking for 5-hour-long board meetings. You want to be the entrepreneur that's out there building your company, and you want your investors to support you on that.
Thank you very much, Lexi. I appreciate that response. Adesua, let me come to you now. Can you please tell us how a company or a startup can hold investors accountable to their promises of added value post investments?
No, I think this is a key point, because I think we saw some of the palaver last year with everything that happened in the private equity industry and in healthcare. So yes, I think being very vocal upfront before the deal is done and having a conversation with your investor, the same way that investors do their due diligence on startups and on companies and entrepreneurs should also do their due diligence on the investors and have a very clear plan as to what is this investor bringing to the table. Are they going to help me constitute a very strong board? Are they going to help me, with my strategy and client acquisition? Are they going to help me with hiring? Are they going to help me with financial follow-on capacity? Are they going to help me bring on larger investors? I think just be very, very clear about exactly the role that that investor is going to play for your growth in the next 12 months, 24 months throughout the investment period. Because, I think as you rightly said, there are two types of investors. There's the spray and pray. There's the, hand money and see you later, or people that actually want to be partners and work with the company to grow the company. So I would say that I think with everything that's happened in the Nigerian private equity space, I'm sure that companies are now looking to do their due diligence on investors, and now looking to say, okay, what exactly is this investor bringing to the table? And as Lexi correctly said, you want a mix of investors that are bringing different things to the table. So yes, I think it's definitely very important that entrepreneurs hold their investors accountable the same way that investors hold companies accountable. Entrepreneurs should also hold their investors accountable to, okay, this is what we agreed on prior to your investment, and have regular check-ins on those promises, because I think the partnership is a two-way thing. So I think there definitely has to be that upfront communication, but also ongoing check-ins on implementation as well.
So assuming all of those due diligence are done, all of those checks are done, and the investor fails to come through, what are the practical steps you think the startup can engage in without necessarily having issues with investors? Because, for me as a lawyer, a startup comes to me that has an agreement that has been breached. The first thing that comes to my mind, let's take him to court. Let's take them to court. That definitely cannot be a solution in practical terms, because you're looking at an investor who you don't want to lose. Taking an investor to court may definitely cause a breakdown in the relationship. So what I will expect are practical solutions as to how these startups can engage with these investors and the relationship will continue.
No, I think it's a good point. And I think that if you've had that alignment of interest at the beginning, and if you've done your due diligence, as you say, and you've made sure that the investor that you're partnering with really is a partner, I think if you're going to court, then, as you say, that's not really a viable option. I think a discussion has to be had with the investor. And if it's someone that you've done a deal with where there was initial alignment of interest, I think that some things can be resolved by communication sometimes. If not, then it's finding a new investor and buying that investor out, right? And I think that's also always possible. I don't think there's any agreement that would prevent you from raising further capital. Yes, there are anti-dilution protections and so on, but I'm sure that if you discuss with the investor and say, look, I'm looking to provide you with an exit, given the lack of exits in African private equity, I'm sure that the investor will think about it.
Okay, that's
maybe from a venture perspective, if I might.
very well.
So certainly what we're seeing is that when a company is a success story, even by the time they get to their seed, but certainly by the Series A, they have a lot of demand for capital coming in. So really, if your investors are not providing the value, you don't allow them to continue to invest, or you say to them, hey, look, you're really not pulling your weight as an investor. This lead or these other investors we believe can do a better job. And have that conversation with them. Unfortunately, there's a lot of cases where legally an investor at least has a pro rata right to continue to maintain their equity position. But I think if an investor is active, you should have those tough conversations with them.
Thank you for your intervention, Lexi. Thank you very much. Now let me come to you. I know you have walked the gamut from early stage investing to taking stakes in more mature companies. Could you share a story of a company that was going in a certain direction before you met them? Then you came on board and helped them spot new opportunities, assisted them to pivot, and today they are on a very strong scale path. even internationally. Is there any company you feel so proud you want to share their story with us here?
Yeah, so look, I don't want to take credit for this story at all. So it's really very much the team. But I think a great example of that is a company called Smile ID. The founder was actually not African at all. And that was, out of our portfolio, which is about 20 investments now, we have 2 companies that have foreign founders out of that. The rest are African founders. But I think that this founder being a foreign founder actually was a huge detriment, because he built a product without necessarily understanding what was needed on the ground from the local ecosystem. As the company launched, we could definitely see that customers were thinking, 1, that the price point was far too high, and 2, that it was a little bit more advanced in technology than what they needed to solve their real problems. So the company actually backward built something much more simple. And now they have really not only expanded hugely in Nigeria, but across the continent, and are the largest identity provider for all financial services companies, doing KYC for companies like Chipper Cash, Flutterwave, and even traditional companies like Uber.
Well, thank you very much. I mean, that's something to be happy about, isn't it?
Yeah, they've done an extraordinary job.
Very well. So Adesua, on the final note, I'd like to ask you, what would you say are some of the important attributes you need as a founder and as an entrepreneur? You want to share with us some of the basic attributes that a founder and entrepreneur will develop?
Sure. So I think that it's very hard to be a founder and an entrepreneur, especially in this environment. It's incredibly challenging. I'm also an entrepreneur, having to start my own company and raise my fund, and it's definitely very challenging. So I would say you have to be driven. You have to be very focused. You have to be very resilient. I think there's a level of persistence. There's a level of grit that you need to have to be an entrepreneur in this environment and to keep going despite the challenges that you may face. And you also have to be very intentional, I think, about everything that you're doing. Why are you building this business? Why, understanding your why and factoring in that why and purpose into your everyday decisions, I think is very, very important. So yeah, I would say be driven, be resilient, be persistent, but also be very intentional about the type of business that you're trying to build, the impact that you're trying to make in society, and the kind of legacy that you'd like to leave for your children. I think that's also very important.
Very well. Thank you very much, Adesua. Let's see. On the final note, can I ask you this? Many founders and investors can overlook this, that scale is just one of the 4 defensibilities for a company. The 4 being brand, scale, embedding, right into the customer's operations, and network effects. Having a strong background investing in tech, could you tell us a bit more about network effects and embedding? Why are they very important scalability considerations for startups in the tech space?
Yeah, absolutely. So maybe just to explain a little bit what network effect is and can mean. When a company first has strong brand recognition among its existing user base, that user base will often recommend the platform to others. And once a platform or a service becomes the kind of go-to standard, it makes it makes it very difficult for customers across the market to migrate away from that. This might mean a company that's really, built out a mobile money network, for example, or maybe infrastructure for open banking that really kind of is embedded, and it's difficult for their customer base to migrate to another platform because everybody else in the ecosystem is using it as well. So what that can also mean is that this product by itself is extremely defensible, but also other products that that same company might leverage on top of become very defensible also. OPay is a good example of this, right? Like the O-Ride rolled out a large ride-hailing service, and at the same time put on top a payment platform. So they started to build infrastructure around a couple of key verticals and acquire customer bases through both of them. And I don't know if this is true, but I actually had heard that they were taking lots on the ride-hailing business just to make sure that that network effect was leveraged so people would start using their payment platform and they would grow market share there.
Thank you very much, Lexi. We've run out of time. Adesua, thank you for coming. Lexi, thank you for joining us. And to the members of the audience, I hope you had a bit of fun listening to my panelists. I'm a lawyer, but I've learned a lot of stuff today about founding your own company. And I must say that it's been a very rewarding session. I appreciate the conveners of the event for inviting me once again. I'd like to hand over to Endurance or Kafo to take over
Thank you so much.
from me. Thank you very much. Thank you.
Thank you.
Okay, good morning. Thank you. Good morning to you all, esteemed listeners. Good afternoon and good evening, depending on the part of the world you are joining us from. And Ramadan Kareem to our Muslim friends. My name is Endurance Okafor. I'm the company's market editor at Business Day, and I'll be moderating this next session that will be addressing the topic, winning at the enterprise preposition. So this particular panel session is very important for many reasons. One is the fact that we have very knowledge-rich panelists who will be tapping into their own words of knowledge and wisdom and be sharing some of their experiences with us on how they are able to grow their businesses from ground up. And second is the fact that the topic we'll be addressing, which is winning at the enterprise proposition. The topic is very important, I must say, especially at this time like this, when a lot of Nigerians are establishing and trying to build their own businesses. I'm sure if you go online now, currently, you see a lot of businesses, much more than you saw maybe 2-3 years ago. The question, however, is how can these businesses survive and emerge and become some of the big names that we already know today? Nigeria is estimated to have over 40 million SMEs, and these SMEs are described as the bedrock of the Nigerian economy, as they account for over 95% of all businesses and contribute over 50% to the Nigerian economy. But lack of access to growth capital, not friendly business environment, and right information and experiences are some of the reasons why many of these businesses have not attained their full potential. And issues relating to all of these challenges being faced in the industry are what our panelists will be addressing. So on that note, I would like to introduce to you in no particular order the panelists that will be having this session with me today. We are having Chika Ikenga as one of our panelists. Chika is the group managing director of Unicel, the creator of the Nigerian beauty brand Nature's Gentle Touch. He's also the founder of the international cosmetic house Ray Care, which has become a household name when you talk about hair care brands in Nigeria. His vision is to build beauty brands from Nigeria that can become global brands, creating jobs, projecting the image of the country, and establishing Lagos as a style and beauty destination in Africa. He led Ray Care to acquire Hair Savvy Cosmetics and became the first Nigerian company to acquire a South African hair care brand. He's also recently completed acquisition of Interlink Technology PLC, a company that's listed on the Nigerian Stock Exchange. We also have with us my other panelist, Austin Okere. He's the founder and executive chairman, Computer Warehouse Group, and an entrepreneur in residence, Columbia Business School, New York. His company, Computer Warehouse Group, is one of the largest in the ICT sector in Nigeria. CWG is a Pan-African system interior with operation in Nigeria, Ghana, Uganda, Cameroon, with annual turnover of over $100 million and about 650 employees across the globe. He's a member of the World Economic Forum, Business Council on Innovation and Partnership. He serves on the board of the National Competitiveness Council of Nigeria, an initiative for global development. With the profiles of my panelists, I'm sure you know that this panel session is going to be a very interesting one. So I think it would be fair to start off with a question that speaks to our current realities. Meanwhile, our listeners, we urge you to keep safe, maintain the COVID-19 guidelines. COVID is still very much around, and hopefully it will become a thing of the past shortly. Okay, so I will just go right into the session and ask my first question to Austin. I would like to ask what your take is on the current state of Nigeria's business environment, and what are some of the opportunities you've seen that COVID probably brought or have been made as a result of the outbreak of the pandemic. Austin, if you are with me, go ahead.
Yeah, thanks very much. Well, let us take the two questions one by one.
Okay.
So let's start with the business environment. The business environment seems to be challenged, and there is actually no correlation as to the potential and the current challenge. Why? In Africa, we have the largest population. We have one of the most important raw materials as of today, which is oil and gas. And if we then look at ourselves, even as a market, whatever we produce, we have enough people to buy, and therefore itself is a huge market. But the other side of it is that you also need capital to actually. Capital follows interest and not the heart. But no matter the amount of money you make in adventure, you must be alive to enjoy it. And that's precisely the conundrum of where we are today. The insecurity makes it very difficult for Nigerians themselves to opt to stay and carry out entrepreneurial business here. Many will probably go and look for opportunities in Ghana. Some will go to Canada, some will go to America. Anybody that has an opportunity is tempted to take it because they are not sure of their security. Now, if Nigerians themselves are not sure of staying here because of security, you can imagine foreigners that you are looking to attract. I think you've set the tone for them. So I wasn't quite surprised when the buzz about Twitter going to Ghana to settle, happened. Obviously, the market is in Nigeria, and they will do what it takes to get that market, but they've located in a place where they feel secure. Coming to the opportunities and the challenges of the pandemic, the Chinese actually use the same expression for opportunity and challenge because they are two sides of the same coin. Without challenge, there's no opportunity. So when we talk about VUCA in the business sense, volatility, some people, instead of volatility, they see vision. If you look at what has happened with Zoom, we're all on a Zoom call now. When we were all looking at volatility, they looked at a vision of connecting people as seamlessly as possible. Zoom today, at $100 billion market cap, is more valuable than all the 4 major airlines put together, including Lufthansa, British Airways, and the like. So we also look at uncertainty. When people see uncertainty, others see understanding. That is the understanding that Netflix saw with this pandemic and said, well, if people are going to be staying indoors and they can't go to the movies, perhaps we should bring the movies to them. Same with Amazon. So there again, you found people that have turned the challenge into opportunity. When you see complexity in VUCA, some other people see clarity And that is the clarity that Uber saw, to launch that app that enables you to call a taxi to your home. And where people see ambiguity, some other people, they see an opportunity to even transform. So you found businesses that were finding it difficult to go on a digital transformation journey now have been able to do that. I use the Also Leadership Academy as an example. This is the business that I set up, the academy, when I retired from the CEO of CWG. And we had a location in Lekki, and people were coming to the academy in Lekki. And it was fine until March 2020, when we had a national lockdown. Well, some people folded their arms, and some other people said, well, what can we do to take advantage? And Also Leadership Academy did just that. We moved all our content online, and today we are even doing much more business than we're doing when we're only in Lekki, because we're able to impact people in Africa, in Kenya, as far as even to Ethiopia. So at the end of the day, the question you asked about the challenges of the pandemic, challenge brings opportunity. The question you asked about the business environment, I think we need to ensure that a social political environment is stable in order for us to achieve the full potential in terms of the business environment in Nigeria, including infrastructure as well.
Yeah. Okay, thank you very much. I think you did justice to that question. Chika, we don't know if we have you there. Are with us? Yes?
Yes, I'm here.
Okay. Thank you for gracing our screen today. So I have a question to you. It's almost 25 years since you set up Unicell, and from your early days after you left paid employment to taking into Unicell, serving customers across Nigeria, Ghana, Ethiopia, many other countries. So what would you say have been some of the fundamentals, some of the things that actually helped you with this huge growth that you have accomplished?
One of the things that I've realized is a value proposition is very important. No matter what you're doing, are you solving problems for people, for corporates, for societies? So if you're solving problems and people are willing to listen to you, if you're meeting unmet needs or needs that are not fully met, then people are willing to listen to you and to interact with you. I also realize that systems are quite important, in building your business. I read somewhere that is one of the key building blocks for your business. And again, brand image, trying to build a strong brand image for your business, also helps. When we first started, it was a challenge having to provide services and solutions, to big organizations. If we were dealing with companies that were quoted on the stock exchange, for example, or become the IOCs in oil and gas. If you didn't have system, it was a struggle because they needed you to meet certain parameters, whether it was HSC or whether it was if you had a business continuity program, to know that if something happens, you'll be able to bounce back. We realized that that was important. How are you dealing with your customers? How are you tracking them? How are you, also following up on what you were providing them to ensure that there was consistency, and they would also come back because we realized that it was cheaper to deal with the existing customers, continue doing business with them than finding, new customers. So I'll just say I'll say that, creating the right value, having business systems, building a strong, brand image and solving problems were very key.
All right, there'll be a follow-up question, but I'll just hold you on the ideas you shared now. And I would want to go to Austin, want to direct this particular question to you. So you have done well also in your field. It's almost 3 decades now since you set up CWG. So this is after you worked in the IT biggest firms. And I'm just wondering what actually pushed you, what was the driving force to you establishing your company as when you did?
Yeah, I think there's some factors that are internal and some factors that are externally motivated. So let me start with the external. In my former company, I was in sales. And as a salesperson, you know very well that even though people buy from your company, what they are essentially doing is putting confidence in you. It is you they know. The check and the purchase order goes to your company. And somehow I felt I was burning my bridges. Why? Because it was a rosy time for the technology sector. This was way back in the 80s. Computers, you had to queue to get your delivery, and you had to pay in advance. So there wasn't any excuse at all to not to deliver to spec and on time. And I found myself going to always explain to the customer why his order was delayed. And I felt it wasn't really correlative to what the customer has put in by way of skin in the game. He has paid 85% advance. And by delaying his order, you are even making the lifespan of his system, because these systems become obsolete so quickly. So I thought that from that perspective, I could do better. From an internal perspective, I also felt that I wanted to leave my footprints in the sands of time. I wanted to go in any direction. I personally choose to chart a trail than go a beaten path. And the best way to do it is to use a vehicle that I'm in reasonable control of. Personally, I treat success and failure the same, because both of them are as a result of trying something. If you don't try anything, if you're complacent and happy in your comfort zone, then there is no success or there's no failure. I mean, but if you're bold enough to want to try something, then you have to know that the failures that come are part of learning. And I then decided, perhaps, let me go and this thing I'm criticizing my company for, let me go and do it myself in another way and see how successful it will be. And I'm happy that I took that step, because at the end of the day, as Chika was saying, you don't just do things from the air. You look for problems, and when you solve problems, that's an entrepreneur. I saw the problem. The problem was simple. How do you give the customer what he wants at the time that he's expecting it? Very simple problem. And the solution is simple. When he pays you his advance money, apply it to what he said he was going to buy from you and give it to him. And then you find that a lot of people, when they don't achieve this common principle, they go into what we call ghosting. So it's not only big companies, even small company, your tailor, your mechanic, he says, come for your car on Friday at 4 p.m. You call him at 3:30 p.m., you just can't get in. You call him at 4, he's not, he goes to the workshop, they say, oh, he just went out to eat. It's ghosting, pure ghosting. The same with your seamstress. The lady at the event on Saturday, the tailor has said, come on Friday, or and then you call on Wednesday. If it's not ready, let me know, so I make another plan. So the problems that you want to solve as an entrepreneur, to give your customers, it could be service excellence, it could be intimacy with you knowing what they want and advising them, but you have to look for a problem and solve it. In my case, that was the problem that I decided to go and solve.
Just listening to both of you, the unique thing here is we have two big different industry players, but one very common thing between both of you, which is growth, success, and how you've grown your businesses, which is something that's very important to people and entrepreneurs of today. So this will come to my next question I want to ask to Chika. At what point did you know you're going to leave the paid employment where you were? Because looking at it, I'm sure you're earning very well, doing very well for yourself. Or was this an idea you had a picture right from the beginning where you wanted to be, or there was some motivation at some point when you decided to leave? And then what were some of the entrepreneurial models that probably inspired you? And if you just look back in time, are there things you'd have done differently? Would you have probably stayed 2 more years before you left where you were working? Just please just through your story, just how this came about.
I think right from when I was in university, I knew that I wanted to run businesses. I wanted to own companies. I wanted to create opportunities. I studied in chemistry, and I've been familiar with big corporations like BSF, Dow Chemicals, Shell. They were doing some great stuff. Commercializing chemistry, and helping to make the world a better place. Reading about them, it was in traditional textbooks, what I would call some sort of folklore, or in novels. They were creating some exciting products, and they were patenting their systems and creating trademarks. And I found out quite exciting, so much so that while people were struggling to, apply to companies, get some scholarship from them, while we were still in school, I just really wasn't interested, but rather I was focused on strengthening certain skills that I realized I had, and, that would help me succeed in the larger society. That included problem solving, that included relationship building, So when I left university and after serving, I got an opportunity to, I got some job offers. I took the one that was about sales, I was a salesperson. That allowed me again, I enjoyed meeting people. And so that allowed me to really move around, go to factories, see what was happening. But the trade there, something that I always found was that people were just complaining. Complaining about Nigeria today. It didn't start today. Ever since growing up, people were always complaining. And, there were issues with governance, there were issues with ethics. When I was working, it was the Abacha era, Babangida and Abacha era. Even foreign exchange was difficult. We didn't have the luxury of mobile phones that we do have today. So if you needed to customer, you would take a chance. Maybe our office had telephones, but they did not have. So you just get into your car, travel to the north, hoping that the CEO or the managing director of that company, the officer you wanted to see, will be there. So you just get there and you wouldn't find anybody. But what I found out, like I said earlier, and Austin also did, it was always about problems, complaints. People were just complaining, and so I saw those opportunities, and it sort of accelerated my desire to get out there and solve those problems and make some money. Because I believe that business entrepreneurs are basically there to solve problems. If you do not solve, nobody would reward. I knew people who had problems, and I knew I was going to help them, solve the problems. I could build relationships. So I realized that I didn't really need the sort of capital probably you would have needed if you didn't have, some of these things like information. You didn't see where the gap existed. So I realized I didn't really need the money, but I just had the enthusiasm. I just had the eagerness to go out there and help people. I remember a particular occasion when I was going to the north to see a customer, one of my customers in the north. And I remembered from previous visits that they always had, equipment breakdown. Their machines were always breaking down. And because of where they were was far removed, Abuja hadn't become so big. And they were not in Kano. So it wasn't like they could access, the right technical competence or the right spares to be able to solve their problem. And I knew a chap in Lagos whose company, I mean, the founder had just died, and the company was a bit in a state of flux. They didn't know what they were going to do. So I asked the guy to follow me, so I took him to that customer. I took him to the north, I fed him, I accommodated him. So I went with him to the customer place. And when we got in there, the typical problems were still there. And I told them I was going to help them solve it. And I had a colleague who could. And the guy solved that problem. Now they were so much relieved that they wanted to offer him employment. Why am I talking about this? This was a company that had a warehouse full of disused and abandoned equipment because they couldn't have access to the right technical people to solve them. And this is what I got in there. And he saved them the cost of bringing in new machines because he was able to put most of their machines back into use. As a matter of fact, I left him there and drove back, to Lagos. So that was a big opportunity. So for him, that created a platform for him to start his own business. And for me, that also, created that gap that I could fill, the problem I could solve and get my business going. When I started, did I continue business with them? No, because I didn't want to compete with my, my employers. So I went into different things. But later in a few years down the road, when my previous employers had, left Nigeria, when the business, because of the policies of Abacha's administration, particularly with foreign exchange, so they had to leave. There was an opportunity for me to get back into that line of business. Of course, they were the ones, they found me and we did great business. Where did it come from? It just came from, solving problems. So was there that moment? Yes, there was. Did I know earlier what I was going to do? Yeah, I was very clear in my mind that I wanted to run business, own companies and solve problems.
Was a bit, it took us a bit of a journey. I think it was worth it. So yes, one particular thing that's been popping up in this session has been solving problem. People will pay as long as you provide solutions. So our listeners, attendees, please do send in your questions. You can tell that we have knowledge-rich panelists who I'm sure will be able to do justice to the questions you send. Send the questions to slido.com using the code FF21, #FF21, and we'll be able to take some of your questions. Okay, so Austin, I would want to ask a similar question, but quite different. So you built formidable sales forces, yeah? And you noted that you referred to them as customer intimacy, which gave your people an edge in understanding customer needs. So I want to just ask, what did customer intimacy entail? Like, how important was it for your company, and how did that help to boost sales and eventually lead to your success?
Yeah, I think I did publish a paper. I normally do publish thought leadership papers. I'm hoping that there will be an opportunity to share them as we progress. But the one that I did on the question you asked about customer intimacy, I talked about the 5 forces for competitive strategy. 4 forces for competitive strategy. And the first is technology leadership. First force for competitive strategy is technology leadership. It's difficult because you have to be in charge of the roadmap of the technology. It's easy for Apple. It's easy for Samsung. It's easy for Intel because they are the ones that are leading that charge in telephone or in camera or in chips. The other ones, the second one will be customer intimacy, which you talk about. And so customer intimacy leverages off someone's technology. So at that time, we were partners to Dell, to IBM, to many of these technology leaders. When they launch the technology, we take the technology, but we take it to the customer to understand from the customer's perspective what he needs. Sometimes people don't even know what they need as much as you, that is being their technology partner for such a long time. You know, a doctor may look at you and say, well, you need to put braces on your teeth because if you don't, they're going to push forward. You didn't know that, but he knows that because he's been looking at your teeth for quite a while. And sometimes people take advantage of that to sell you what you don't need. And when you find out, which you eventually do, then the trust is broken. But customer intimacy will be, you live in an estate, for instance, and there's a shop in that estate. It's a pregnant woman, and you've been supplying materials to that house, and you know when the woman got pregnant. Maybe she has even forgotten that when you bring the baby back, you need milk. But because of customer intimacy, your next supply to the woman after she comes back from delivery from hospital includes SMA Gold milk, which she didn't order. But because of your relationship that is so deep, you can anticipate and pampers as well. So that customer-client relationship even deepens the more. The other competitive strategy is service excellence. Service excellence is quite simple. What you ask me to do, I will do it to a certain extent that nobody else can do better. You know, so you take your car to the mechanic, the day you go and pick it up, there are all sorts of black hands on it, grease, quite all right, because they're working on the car. Another mechanic will just take your car to the car wash and wash the car. It costs him. He's going to put it on your cost. But just coming to your car and smelling the inside of the car and looking at it, you feel so happy to get your car back. Little things like that. But you have to make it a point to deliver above the expectation of the customer. And you wonder why the advanced countries have a return policy. The return policy costs them money, but it increases sales astronomically. Because you go to the shop, you know that if it doesn't fit, you can bring it back. If you go home and the television doesn't work, you can bring it back. So people will go and buy jeans in different colors. They are not sure what they want. And many times, they don't even return it. Sometimes they return the ones they don't want. But the reason why you and I will not go to Alaba, even though Alaba predates game and all that, is the moment you leave the shop, you can't even get anything like a refund. And therefore, it curtails scale, it curtails growth. The last competitive strategy is cost leadership. And I have not been a fan of that. The Chinese use it a lot. Whatever you do, they reproduce it and they undercut. Because I always believe that there's cheaper than cheap. No matter how cheap you think you are, you know, you find someone selling cheaper than you. So when I used to run a company and people say, oh, we lost the deal because there was cheaper than us. I said, but you will get the deal if you give it to them free. So why not give it to them free and get the deal? You know, so at the end of the day, we chose two of these forces to compete upon. We competed upon customer intimacy and service excellence enveloped in trust, because in a country where the rule of law is almost non-existent, trust is a very deep currency of business. A lot of people don't realize that, but a lot of the success that CWG enjoyed, and even also Leadership Academy, is based on trust, customer intimacy, and service excellence.
Insightful. To Chika, in the chemical business that you operate in, I'm sure you agree with me that it's very knowledge intensive. And I just want to ask, how important has intellectual property been to your company's advancement? And then how do you go about getting the best minds and the best talents? Because you know you couldn't have done everything all by yourself. You had to get support and get good minds to help you grow the business. Talent, as I say, is a key challenge for most businesses in Nigeria. People who believe in your drive, your passion, and your goal, and be able to help you achieve the dream. If you just speak to that for us.
One of the things I did realize early was that differentiation was important. Just listening to Austin and just listening to what he's talking about. This is what we see every day, and you learn every day. I've just learned some things from him as well. We realized differentiation was important, and how were we trying to differentiate? By being innovative, and in innovating, intellectual property comes in, and we found that as a very important factor that we've used in differentiating our offering, whether it's a physical offering or the way we even deliver the service, the solution to the end users. When I was in school, the school had this very nice, chemistry laboratory, and with very nice equipment. So I could see some of the things that we were doing, even though those things were not being commercialized. And so when I got out and when I started business, the first thing I focused on was, building up our laboratory, to be able to create products. And now creating those products, again, what would you do with it? You would have to trademark it, where possible. You would have to patent, the process, the system, or whatever, how the product, is being made. Again, when I compare it to the big organizations, to world-class and big chemical companies, you would find the BASF, you would find Bayer, you would find Dow Chemicals. What's their platform? What is the strength? It's all innovation in terms of creating new chemistries, creating new solutions, trademarking this. So you would find equipment users, for example, recommending a product. If you buy a car, they will tell you it's Total engine oil that you have to use. If it could be mobile, Formula One, F1, mobile this thing for synthetic oil, for some particular kind of cars. And if you don't use that, the warranty doesn't kick in, or you would lose it. So you will see where it creates what I would call a lifelong earning. So it's like annuity, money just keeps coming in, because you've created a solution, you've put the right trademark or the right intellectual property, with all the registrations and all the things you need to do to protect your investment. So the money just keeps coming in. So this is the importance of this. We continuously create products. We hire chemists, we hire chemical engineers, sometimes microbiologists, and we've even gone ahead to try and acquire some businesses offshore that would allow us to continue to build capacity in our ability to innovate products and create right intellectual property. Now, just going back a bit, what was I always interested in right from university is actually IP, trying to create products that even when I'm no longer there will still be earnings. I've found companies that are more than 100 years old and, still making money from there. So, that is what we do. It is a key part of our strategy, to deliver on our results and solutions.
Thank you very much. So Austin, still in the same line of question. So staff attrition, is a problem used to be a major challenge, right? Challenge in the IT sector. So in those days, one head of IT companies, the head insisted that if people should sign bonds before being sent abroad for training. Then they will still return and they will still leave. At a point, you advocated for a ban on big multinationals poaching from the smaller IT companies. How was CWG able to circumvent this issue? Talent is still a major key problem in the IT sector. Just a recent report by EY says that about 54% of fintech companies in Nigeria are in acute shortage of IT, those skilled type of labor.
Yes, you're right. If we knew that we'll be competing with Canada, we would not have bothered about our competitors that were taking our staff. Right now, both we and our competitors are losing to Canada and Australia. But you're right, at that time, it was painful because we were partners to these technology companies, the global Dell, Microsoft, and so on. Insofar as they were not in Nigeria, it was a good ride because we trained people to deliver as if Dell personnel was delivering the whole stack of solution. When they then decided to come to Nigeria to open shop, they didn't bother to train anybody. They just went to us and others and just took our best hands. They're paying them in dollars. If you multiply, we couldn't even compete. And meanwhile, we spent so much time and effort and money training these people. So I went to Nota, and at that time, I think to Nida, and I said, listen, fine, for us to replace these people that you're taking from us, then there has to be a compensation so that when you take, we can then train replacements. You know, because like you say, the bonds didn't mean anything. If I signed you to a bond and you didn't want to stay, you report to the office and do nothing, or you just deliberately make mistakes. So none of those worked out. How did CWG solve it? We took two approaches. The first approach was to start what we call the CWG Academy. So you see, Academy has been in my diction for a long time. Today is also Leadership Academy. But the CWG Academy still runs. And what did it do? It brought rookies into the ecosystem of CWG for 3 months, teaching them the rudiments. And it wasn't difficult, really. Technology is like a language. The way you learn Igbo or Yoruba or English, you know, if you are interested, even if you didn't study computer science or any technology-related course, if you are interested to learn the language of technology, cool. And the young people, it was almost inherent in them, you know, because they grew up with these devices. By the time you know how to use a phone, you can use a computer very well. Unfortunately, many of them are using it now to empty people's bank accounts. But you can learn the technology. So the academy then gave us the opportunity to quickly fill roles. Our academy graduates were not different from our staff. We used to send them then to Finacle sites. You probably will know that almost 60% of bank transactions are routed through our Finacle core banking application. And because so many banks were deploying them and we were supporting them, we needed people very quickly. You know, and then these young people go there and they do very well. You know, we even gave some to our competitors just to keep them away from, and to our customers. So that was the first thing we did. The second thing we did is even more important. We had something called ITH. What do I mean by that? Someone comes into your company with a skill. Maybe he's the head of technology. That skill in many companies, he doesn't add or subtract. He just keeps on that lane, and every year he's getting a staff increment. We then said the minimum after 2 years is a T person. What is a T person? Your deep skill you brought in is fine, but you need to learn another skill so that instead of an I person, you're a T person. So you can be the head of technology, but you need to learn some elements of sales. So when you go to deliver technology solutions to the customer, you look for sales opportunities, and then we optimize those. But we need to then give you the skills to look for those sales opportunities. People don't realize that the best salespeople in the company are the engineers, because the customer does not believe the salespeople as much as they believe the engineer. If the salesperson says you need to buy this upgrade, they are very skeptical. The engineer goes for routine maintenance and he discovers what you need, maybe an upgrade, because the system will fall over. Immediately they take that advice. But the engineer does not have the sales ability to turn that opportunity into a sales for the company. So another company will pick up that sale. And our engineers were selling like mad. But then we said, after 5 years, you need to be an H person. An H person has 2 deep skills and 1 cross skill. So head of technology, and then you know sales. But then technology itself is a business. So we teach you accounting for non-accounting so that you have a profit center that you are running rather than a cost center. People think that technology is a cost center. It's not. It's because they probably don't have the appreciation of how to track change requests, a simple thing like change requests. Let me use an example that will make it easy. We used to do a lot of wide area networks for banks. So we connect banks from Lagos to Kaduna to Maiduguri and so on. As a wide area network provider, I bring the connection to your doorstep and my job is done. But then you need to then take it into the building in the local area network, different from the wide area network. The engineer goes there, he does his job, and they say, but the teller in office C is not getting. Then he starts doing a local area network. That is a clear change request because it's a different scope. So we then taught the engineers to then say, okay, fine. Yes, it doesn't make sense if it is not distributed internally, but to distribute it internally, here is the quotation. And the customer is happy to pay. Because if you don't do it like that, you skimp on materials when you are doing it for free. And if you do it as a change request, then you come to service excellence, which is part of our mantra. So we do a lot of change requests. And that's how we did it. ITH. Go towards H. Minimum is T. And I person is dangerous. Because the person means they can back up each other. So if somebody leaves, at least you hold the fort whilst you get a new person.
Definitely formula most companies maybe want to adopt. Probably just cut costs, obviously. Anyways, I'm trying to work within the time, but your in-depth of wisdom and knowledge, we have to still tap from it before we let you go. It's not every day we have people like you grace our screen, and we know that there are a lot of entrepreneurs in Nigeria, those already into it and those that are hoping to do it. Just one quick question I think is very important is, in the years of building your ventures and coming to position where you are currently, what are some of those key challenges? I know it might be peculiar to you as a company or even peculiar to your industry, but I'm sure people can take one or two lessons from it. What are some of those key challenges, especially we know how doing business in Nigeria is? What are some of those key challenges that you had to deal with, and how were you able to navigate them? And looking back now, what are some of the things you'd have done differently? Chika, you can go first.
Okay. For me personally, and as a business, the biggest headache has been human resources. Just having the right people do what they are supposed to do and come in. People come and leave. You can't really do much about it. After all, I left an organization. But the period that they are there, let them do what they are supposed to do. What I find, sadly, is that you find employees in Nigeria, they get paid a salary. They act as if they're doing you a favor. So you also find people holding back. You brought them in because of certain competencies or knowledge that they have. When they come in, they just hold back. So they see an organization that is struggling. You don't bring in what you're supposed to bring and justify why you're there. So that doesn't happen. And so you find an endless cycle. You're bringing in people, they're leaving, and cost of recruitment is so high, and keeping people. For me, that is very critical. Then of course, we all know we complain about it, which is really, the government policies. If they can just be consistent, even if those policies are really challenging, hard, difficult, but just be consistent. So at least you can make some forecast. You can plan out and say, okay, over the next 2 years, these are the things we're going to do. So for me, those are the two critical things. Quickly, what would I have done differently? I think, I would have instituted more systems, which is very important, which is also what allows you to scale, and systems will consist of so many things, whether they are marketing systems, whether they are HSC systems, whether they are the business systems that would allow you to run the business so you're not there. I would have allowed systems to run the business more than letting people run the business. Thank you.
Same question to you, but we'll just keep it short, maybe a minute, so that we can accommodate the time we have.
All right, let me see how I can keep it into a minute. But I think for me, I agree with Chika that a lot of people say funds, but skills is probably sustained skills or sustained the biggest challenge. What would I have done differently? I think that as companies, we have strategy documents which we pay a lot for, and we keep it in the cupboard. We have mission statement, vision statements. We hang it in the reception. Nobody knows it. I think instead of induction, when somebody comes to join your company, you just take him to visit his boss. If the MD is in, visit the MD, show him his office and give him a computer. That's induction. I would have done more of immersion, and we started doing that. Immersion, really, different from induction, is to bring the company into the tradition, the person into the tradition of the company and the purpose of the company. So Netflix says we're here to entertain the world. You have to decide within yourself whether you are that kind of a person. Are you an entertainer? Will you key it into? Will you fit into it? More importantly, the vision should not hang in the conference room or in the reception. It should be in the heart. And that vision should tell that person what we want to achieve, let's say in 5 years, and what, therefore, is his role in what we want to achieve. I mean, a very interesting story is when Kennedy visited NASA, and the janitor, when Kennedy said, "Oh, what are you doing?" He said, "We're working very hard to put a man on the moon." It tells you how deep the vision has been communicated and cascaded down, to the extent where that man believes that his job and what he's doing is going to contribute to put a man in the moon. So the good thing about the vision is, what is it? That gives clarity. But also why? That gives alignment. If people know what they're doing and also why they're doing it, then they have the autonomy and the space to be creative and innovative, and they have an eye on the big picture.
Yeah, thank you. Anyways, key takeaway, solve problem. People will pay you for solving problem. Optimize your staff, have a system, have a plan, and just be innovative. Just to close off, I think this was a very interesting session. Please, what are some of your recommendations you give to entrepreneurs out there in one sentence, so that we'll just wrap up? Thank you. I think Chika, you can go first.
Yeah, for me, it's not about, like Austin said, it's not about finance. It's about knowing where you're going to solve problems and make sure you have systems up front. Thank you.
Well, for me, I just say 3 W's. 3 W's. Willpower. The first W is willpower. Learn everything about the business you are in. Be the best at it. Keep learning. You never finish learning. That's willpower. 2, willpower. That speaks to attitude. When you fall down 7 times, stand up 8. Know that failure is part of the learning experience. Don't be afraid about failure. Failure and success, treat them the same. And the last W, wait power. Have patience so that the plants you have will become fruits. Don't go looking for the plants when you don't find it. Cut down the seedlings. A cocoa plant takes 5 years to grow, but it will feed you for life. It's not corn. It grows in three months, but after harvest, you cut it off. Decide, do you want to be corn or cocoa?
This was a very interesting session. Thank you to my panelists and all the attendees. We hope to have conversations like this in the near future. And we hope when we invite you, Austin and Chika, that you join us to and share from your wealth of knowledge. Thank you very much. I'll be handing over to my colleague, Linda, for the next panel session. We'll come to the end of this particular session. Thank you very much.
Thank you.
No panicking, the worry they end today. Setting at the packaging, it cover you all the way. Whether na e-learning, whether na business, yo. Working is digital, working from home, you covered with TZ, yo. Streaming and surfing, gaming and chatting, calling unlimited. I'm living the life cause I get TZ, yo. Yes, sir. TZ, connecting. I get TZT. Yes.
Culinary Delights was actually started to tell innovative, exciting, and positive food stories out of Lagos, Nigeria.
Being the foremost luxurious goods company in the entire West Africa is a big deal.
Will you have every opportunity? No. But you see, the opportunities you lose on account of your value system, that's your opportunity cost for what you believe, and is the price you must be willing to pay.
Thank you very much and bless you.
Good afternoon, everyone, and thank you so much for joining us in this session this afternoon. My name is Linda Chue, and I will be the moderator for this panel. It promises to be a very exciting 40 minutes of your time, as I have with me great owners and founders of their company. This session, panel session 3, will be conquering consumer spaces. We'll be talking to two great founders who have set up companies that are doing extremely well in Nigeria. We had the last panel, Winning at the Enterprise, by my colleague Endurance, and they talked a lot about what you need to do to succeed. The whole idea for this panel session will be, how can we create products that will do well in the market, solve problems, create value, and also meet the needs of consumers? How do we also empower people who are also starting out to be able to learn from the experiences of companies that have done well? We'll also be looking at consumer spaces. How do we provide products that stand and win the test of time and make sure that consumers are satisfied? We've also heard so many things about learning and unlearning, which is key about starting up the business. It's all about the experience, and with time you get better. If you remember the saying of Thomas Edison, he once told us that I have not failed, but I have found out 10,000 ways of doing things better. We want to create a forum where we have entrepreneurs with experience, where people can learn from the experiences of others and learn to do their businesses better without making the same mistakes. If you will just join me, I will quickly read through the profile of my two great speakers with me this afternoon, and then we will dive into the questions of the day. Okay, so my first, I would like to introduce Miss Oke Madowesi. She's the CEO of Zaron Cosmetics Limited. Oke Owezi is currently the founder and chief executive officer of Zaron Group of companies, comprising Zaron International Limited and Zaron Cosmetics Limited and Skin by Zaron, who are manufacturers, distributors, and marketers of beauty care products under the Zaron brand. Through vision, perseverance, and hard work, she has been able to build the Zaron brand into one of the strongest and fastest growing cosmetic brands in Africa. Oke's team is focused on delivering quality products at affordable prices to enhance the lifestyle needs of African women, while also contributing to the social economic development of Nigeria through job creation, enterprise development, strong corporate social responsibility, and a business ethos accord on integrity. Prior to her foray into entrepreneurship, Oke had worked at Zenith Bank International PLC as a manager and head of one of its most profitable branches. Oke was educated at the University of Leeds, United Kingdom, where she obtained a master's in business administration, at Edo State University, where she obtained a bachelor's degree in economics. Join me, everyone, as we welcome Ms. Oke Madowesi to the table.
Hi, so nice to have you here. Thank you, Linda. Thanks for the introduction. So happy to be here.
Thank you so much. I will quickly run into reading the profile for Mr. Folorunsho Ogunwole, who is the founder CEO of iFitness. Folorunsho Ogunwole is the CEO and founder of iFitness. He is a serial entrepreneur who has gathered 7 years experience in sales and marketing with HR with Skybank PLC from 2007 to 2013 before commencing his entrepreneurial journey. Folorunsho Ogunwole founded iFitness in 2015 with a vision of building the company to becoming the preferred fitness chain in Africa by 2023. iFitness is currently Nigeria's first and fastest growing fitness chain with 6 organic branches and 3 party locations in Lagos. The company is mission-driven to make the culture of health and fitness common in all urban communities of the nation using its well-spread branch network. Folorunsho holds a BSc in Accounting from Babcock University in 2005, MSc Financial Economics from University of London in 2010. He's a senior professional in human resources. It's so good to have you with us today on this panel, Mr. Folorunsho.
Thank you. Very happy to be here. Thank you very much.
Thank you so much. Okay, so I talked a bit about the introduction into this panel, talking about conquering consumer spaces, just talking about how you yourself and the CEO of Zaron have been able to conquer the market. Before we always go into questions, we always like to speak with our, have a word with our speakers talking about their company. So I want to look at where you started from, where you are now, and where you plan to be, just so that people have a clue into what the company is into and how far the journey. I must say that I'm a great fan of iFitness Gym. I really like what you guys do. You guys bring a totally good new feel from the UK style to Nigeria. It's amazing. And I would also say that I am a great fan of Zaron. I think like 3 or 4 cosmetic products I am using on my face is from Zaron. For those of you that know, the eyeshadow is from Zaron, lip gloss from Zaron, and you're doing amazingly well. Like, sometimes people always want to go with known brands that they are used to, and you have the big guys like the MAC and Co. But, breaking in and convincing Nigerians to be able to use a brand that is good for them and with the same quality has been amazing. It would be nice for people to hear your story and learn from your lessons. I would like to go with ladies first, if you don't mind, Folorunsho. So the floor is yours, Mr. Quay.
Fantastic. Absolutely.
So thank you again, Linda, and I'm hoping that after this interview, you'd have more than 3 items of Zaron products in your makeup bag, because you have to have more. I don't know when you have to come to the studio, so we'll do a full makeover. Not just because it's my brand, but because it's a brand for you. It's truly a beautiful brand, so you need to experience having me, and it's a privilege to be with you, Folorunsho. We definitely have something in common. We're ex-bankers, so that's why we're as tough as we are, and we can start and run a business in this country because we've been there and done that in banking.
Absolutely.
So my journey into entrepreneurship, yes. So my journey started, I always start my journey from way back. So I always say it started from pain, right? And how I managed to change my pain to gain. And then this was while I was still working in Zenith, and then I lost my husband on the Sosoliso flight, right? And then it's 12 years this year. Yes, sorry, 16 years this year, December 10th, right? And then I remember going through that experience and all the pain I went through, and just then finding that life was going to be tough. I had a 2-year-old baby, and I was 7 months pregnant with my second daughter. And I just decided that this wasn't going to be my story. I wasn't going to be the typical face of widowhood in Nigeria. So from that moment, because it's important to share this experience, because we have all these challenges, especially in this country, and so many reasons why we can't become that person or run a business or just do something about life and our situations and all that. But that experience made me challenge myself much more than anything else. And I said to myself, I remember I did a tribute to him. I said, I will not beg, I will not run, I will not be at the mercy of anybody. And I remember working in Zenith at that point in time, and every other promotion I got from that point were exceptional promotion, because I had to work twice, thrice as hard as I normally would, because I knew I was a single parent. And it came to a point in my banking career where I knew that there was way more out there, not sure what it was going to be. And I decided to just, sell everything. And I went to Leeds Business School to do an MBA. So whilst I was doing that, and that was where the journey story really started from. So that's where it started. Where we are now is just been, and we're 10 years this year, and we have 26 franchise stores all over the country. We have over 1,000 distributors, and we have presence in 16 African countries, from the Kenya to the Zimbabwe to Mauritius to several different countries, and much more than just having franchising is just being able to build enterprise, like you read from my profile, and just being able to really truly contribute. Being a Black woman, being a Nigerian woman, one of the things that we are most proud of about what we've done is we always say that it's a product made for the woman of color by the woman of color, and who best to get the woman of color than the woman of color. So what do we want to be? We want to be in the years to come a truly global brand. And when we say truly global brand, it's that we are present in Western economies, that Zaron becomes a MAC, Zaron becomes a L'Oreal group, Zaron becomes that brand that is just really recognizable and known everywhere in the world. So that's the journey for the Zaron brand. Thank you.
Thank you so much. You have done justice to that. Thank you. I'll move on quickly to Mr. Folonsho if you're ready.
Yes, why not? Thank you very much. And I'm really touched by Madukwesi's story. For some reason, I never just expected that. Thank you. I never just expected that would be it. I was expecting something very flamboyant, something very colorful, stuff like that. But it just tells us that, good things are born or birthed in times of difficulty, right? I think your story is very touching, thumbs up, and obviously it looks like there's a lot of catch up to do. So for iFitness, our story is quite very interesting. So back in 2007, I lost a friend to a heart condition and diabetes. This young guy, he was in his 30s, he had 2 children, and he left his wife as well. And that really gave me a sense of mission. I mean, for me at the time, what I was thinking was, look, if this guy who was just about my age passed on, then, this could happen to just anyone. And so I went out to take my fitness seriously. But you see, they weren't decent. This was 2007. 2007 is about how many years back? Maybe somewhere around 13 years back. I didn't find any decent, affordable, and convenient fitness centers around. None. There was none. And so there was just one I stumbled onto in VI at the time. And when I went in, I got the biggest shocker of my life. The membership and registration was, 700,000 plus maybe some joining fee, which was running to about ₦1 million. And I didn't have an option to pay monthly. I could only pay annual fee. And he just told me that, look, this market is for the big boys. If you're not top executive, you're not needed here. And something just dropped in my mind that, look, this thing has to be common. There's a gap in health and wellness. I just lost somebody who was close to me, who died of a disease that was totally avoidable. Obviously, if the guy paid attention to his health, maybe he would have been around today. He'd left his wife and 2 children. What would be the worth of that guy's life? Would you say it's ₦1 million or 10 million or 100 million? The vacuum that's been created, in the life of his children and of course the wife. So I just thought something needed to happen. And at that point, I started to nurse the idea that, look, this thing is already abroad. Why don't we just bring it home and make it very common? And fast forward, 2015, summoned the courage to start the very first fitness center, very small at the time, about 150 square meters, very, very small. And we had a lot of fears. And our fears ranged from, apart from the infrastructural issues that typical Nigerians, that's our reality here now. We had fears like, look, is the market deep enough? Were people even ready to embrace fitness? If you wanted to invest in this market, how much would you be investing? Nobody had done it before. around here to build a fitness chain. And so I had cold feet. In my earlier days, I lost sleep sometimes because I wasn't just sure if that was the right step to take. But fast forward, we're happy to be touching a lot of lives. We're touching thousands of lives now. We're happy that we're really doing something that is significant in the life of Nigerians, where people are actually getting a lot more fitness conscious, where people are paying a lot more attention to their health and wellness. And look, I mean, how do we quantify this in naira terms? If somebody is healthier today and they're more productive in their workplace, and they're more, available to the children and their family and so on and so forth, I mean, I don't know what kind of value you want to place to that. So I can say for a fact that we're really happy to be doing this. It's a lot of work, but it's quite very significant. And that's what we are as of today. Thank you very much.
There's a lot that happens in Nigeria whereby most people don't look into their health or wellness or fitness until they are very sick and at the point of dying. At that point, it becomes almost impossible to help them. Most Nigerians always have this look of, I look healthy, I look okay, so why should I go to the gym? And they make it look like a luxury, where when you say you're going to the gym, like, what are you going there to do? But that will bring me to a question I'm going to ask you later. But my first question will go to Ms. Okay. You once said that completing an MBA program changed your eyes to new vistas of opportunity when you returned to Nigeria. You've also said that working with the structure and system of a big commercial bank played a very big part in preparing you to start and grow Zaron Cosmetics. In an era where passion is taken as the ace to success in entrepreneurship, do you think more founders, if they have the opportunity, should invest in attending formal courses and education, like maybe an MBA, and make the best of the seasoning that working in a paid employment brings before launching out? What would be your thoughts on this too?
It's just unimaginable and unbelievable how much that banking career has totally changed my life. And I always say that, and it's a Zenith Bank, so I like to say Zenith because I want to give credit to them. But I always say that I would not be able to do what I'm doing today without that experience. I don't think it's possible, because it just gives you that structure that you need to start a business. It gives you that team spirit that you need to start a business. And I'm an entrepreneur today, but whilst I was in the bank, I thought I was just working, but I didn't know that all I was doing was gaining entrepreneurship experience, because I was in marketing. So what was I doing? Just managing relationships, going to get businesses on behalf of Zenith Bank and all that. So that actually built the entrepreneurial spirit in me. And I would always say, especially to the young people, I know they just want to go through school and they have this really big, rosy, fancy ideas that they want to execute, and they just think that they have the world. I mean, there's a world of social media and they can just take on anything. But I always, when they come to me, when I mentor them, I'm always like, you know what, it would be nice if it's 1 or 2 years. Just spend it in a structured organization and see how things work, because there's a learning curve from that, and it's very, very important. So I would always recommend that. It's very important, because I mean, it made me who I am today. And one of the things that I got from banking that you need to work, especially run a business in Nigeria, is grit. I mean, we all know what the Nigerian banks are like, and just never giving up, just always going for them, just knowing that, in fact, when you go to bed at night, just know what your bosses will do to you the next day if you don't meet your deliverables. You would wake up and be out there and make sure that you get the results. So, and that's the same thing I have done in my business. I remember when I started, my competitors were like, oh my God, where did she come from? And they always used to go like, oh, she's an ex-banker. No wonder she's an ex-banker, because we call it being aggressive, but I call it grit. So I would always recommend that. And the MBA, and it does not have to be an MBA. So people always say that, but I can't afford that. I can't afford to go to school abroad. I don't have that. It could be any form of formal education. I mean, there's internet everywhere. You don't even have to pay to get knowledge anymore these days, right? So when I left to do an MBA, I truly left not knowing that I was going to start a business. I just got to a point where I felt like there was more out there, and I said to myself, let me go gain, because I grew very quickly on my career. And I said, you know what, I don't know if I can defend the position I'm in. Let me go gain some managerial skills, come back and look for a bank in the financial sector, a job in the financial sector, because I thought I was really good at it. So I said maybe a CBN or something, you know, more chill, but just to build my career. And I got to the classroom and it just completely broadened my horizon. I just saw work in a completely different perspective. And for me, it wasn't just about the classroom work. It was about the case studies, right? I saw businesses, I saw global businesses. I just saw people that I would read from start to where they are now and what they did to get to where they were. And I just sat down and I started thinking, why can't you be this person? Why can't you be read about in a classroom someday? Why can't you change the narrative in Africa? Why can't you build something? So that was where it all started from. I have no experience in beauty, absolutely none. I'm not a makeup artist, never have been. Still I totally cannot even do your makeup artistry work right now if you ask me to, right? But I'm the owner of the fastest growing beauty brand in Africa. So I always tell people that, you know what, all you need to do is just have a passion to succeed at whatever you want to do. That's what's important. When I decided on trying to do something, the first thing I came up with was, what would that brand be? What will it be about? How am I going to go about it? What's the brand name? And I came up with Zarin Cosmetics, which is a fusion of my daughter's name, Zarin Honor. So they're teenagers now, but that's where it came up with. And I started thinking, so I started researching on global businesses that are doing really well. And I read about the L'Oreal Group, and I knew there was a vacuum in Africa for beauty products. And I just started working with partners, started working with consultants, and I just set out to make it a success. And that was it. So if I hadn't gone for that MBA, or if I always say going back to the drawing board, sometimes you don't know what to do, the next stage, the next level and all that. Just go back to the drawing board. Just get more knowledge, just read something, just learn something new. I would never be where I am today. So for me, I mean, I'm a living example. It's highly recommended. I think, especially just working in a structured environment before you start and you go out there, there's so much to learn. With my experience, it's still very hard for me. So imagine someone that has no experience of just knowing how to work in a structured environment. So I definitely recommend that.
Thank you so much. So you do get loads of young people who just have this idea, I want to dive in. And I always, sometimes I advise them that this experience, you're going to meet people, you're going to learn how to do it better. You're going to learn a lot when you work somewhere, when you're unanswerable, and then you know how it is to run. It's really key. Thank you so much for that. You can actually send your questions to us at zildo.com using the code #FF21. If you do have questions, just send me in and we'll answer. Thank you so much, Mr. K. So I'm going to go quickly to Mr. Foluncho. In 6 years, you have successfully positioned iFitness Center as one of the most visible neighborhood fitness location brand in Lagos. The commercial capital, how can you spot the opportunities, and what were the obstacles you faced initially when you decided that this is a journey that I'm going to make and this is how I want to go about it? Please unmute your mic.
Thank you. Sorry about that. So, while I was doing the introduction, I'd mentioned that the iFitness was born out of two main problems, right? The first was, I went on a personal mission to get more serious about my own fitness because I'd lost somebody who was close to a disease that was totally avoidable. And on the back of that, there were no convenient, decent, affordable fitness centers. So, the two problems. So that already was beginning to tell me that, look, there might be an opportunity around. But you see, because it was a new market, nobody had quite done this before. In fact, there was nothing even close. That brought up a lot of cold feet, right? A lot of cold feet. But you see, notwithstanding with what we know as of today, which is the reality of every Nigerian business, you would find that infrastructural issues are your first, big problems that you're going to have, right? So you're going to have to create your own power. You're going to have to provide your own water. You're going to say, in this building where I'm sitting, we've not had power for a while, public power for a while. And even when it comes, it's not even strong enough to power our equipment. So we've got to have our own transformers. So those are that's our reality. But those things did not so much bother me too much, I would say, with iFitness, because I was running another venture before now, Yes Mobile, that was sold off to Udala. Udala is now Conga. So I'd had a fair share of infrastructural problems, before now. But that's not to say that they should be downplayed, because those things potentially would make you to begin to focus as an entrepreneur on things that ideally you should not be worried about, right? In the normal climb, right? You would want to worry about sustaining your business. You want to worry about competition. You want to worry about giving value to your customers. You don't want to be worried about buying diesel, right? But that's our reality here. So I'm not downplaying that, but I'm just saying that because iFitness is my second venture, those things were not the big worries. I would say the biggest worry was starting off in a new market, creating the path in a very new market. I mean, you would not know what the demand would be like I was saying earlier. You would not know how much capital you might require. In fact, it was so bad that all the people that we spoke to in terms of investment, none, not one single person was ready to extend any credit to us. And that's because it was new and there was no data. There was nothing to say this will thrive. So I remember walking into a firm and I mentioned to them everything we had. I mean, I came with my shoulders very high, told them we had big plans about iFitness, and the guy just looked at us and thought we were a bunch of jokers. And I could understand why. In fact, he was polite because he had known me from Yes Mobile. So he knew that, there was some credibility. I'd run a successful business, I'd sold off a business, which is very unusual in this climb where you exit a business. And so I could see that there was a bit of respect there, but then deep inside, the guy thought I was very crazy selling Yes Mobile and wanting to jumpstart, iFitness. And I was saying, you want to jumpstart gym? You gym? Really? Gym? The guy kept saying that. And in my mind, honestly, at some point, I felt so stupid. I wasn't sure if I was doing the right thing. So I had to go back. I had to encourage myself. And then, we went back and reworked our plan. And we just kicked off. In 2017, we moved from one location in January, and we ended up at 4 locations by the end of the year. The same company called me back and said, you know what, it looks like something is happening in this space. And I said, well, it's beginning to look like that, because now they were seeing numbers, they were seeing traction, and the support now began to come in. But you see, all of these things is just to tell us that there would always be issues, there would always be troubles jumpstarting a business, and really success is moving from failure to failure without losing enthusiasm, because you can easily lose enthusiasm very easily. Not even in this climb where you're dealing with a whole lot of things that ideally you should not be dealing with. But you see, for us as an organization, having also, drawn in investors to a market that is unproven, untested, and we've raised, significant capital, it's shown that, look, the fundamentals of running a business, if we can stay consistent, the chances of success are higher. So we didn't have everything figured. I keep telling my colleagues, the things that we did this time last year, we're 6 years now, but we started to scale, I think, from year 2, because I was sitting on another business. It was when I moved in fully into iFitness that we started to scale. And I said, look, if you look back at things that we did last year, we ask ourselves, like, were we silly doing that? Because we keep learning, we keep adapting. The learning is real, it's fast. And for a business that is scaling, I'm not saying growing now, scaling, you're scaling when you're growing exponentially. There's a lot of mistakes that will be made. There's a lot of adapting that needs to happen. And if you're not fast enough and you're taking the back seat, or you're waiting until things are perfect, you quite will not be there. So we keep raising the bar now. I would say that we are not still quite yet there, even though we're the first and fastest growing. But I would still tell my colleagues that, look, there's a lot of lessons to be learned. We have not even fully covered Lagos yet, Nigeria. Next year, we're going to Accra. There's a lot to do. And so because the journey that is touching lives, that is very significant in terms of value, we have to keep learning. And I would say, I like what Kay said as well. I mean, there's just a lot to learn. There's a lot to keep inspiring us to want to do more. So basically, I would say that's how we spotted the opportunity. And those were the kind of challenges we dealt with initially. Not just infrastructure challenges, but challenges relating to the market. Like I said, was the market big enough? Was it deep enough? Was there even enough demand? Were we going to get capital? In fact, again, how were we going to get human capital in a market that was emerging? There was nobody you could poach. So if anybody wanted to do this now, they'll come to iFitness and go after our staff because we have trained, we have built some processes. We didn't have that opportunity. Right? Even now, we still don't have that opportunity. And that's what entrepreneurship is about. We have to keep solving problems every day and keep creating the path. So thank you very much.
You've answered quite a number of questions in this one question. Thank you, Mr. Furnace.
Thank you.
Okay, so my next question will go quickly to Mr. K. So Zaran Cosmetics today has over 14 franchise outlets, and more than over 800 distributors across Nigeria. From its simple beginning in 2011, the company now offers a rich bouquet of various products. I mentioned some of them earlier, from the eyes, face, lips, as well as some accessories, which are doing very well. Then what has changed in the manufacturer's relationship and your distribution strategy? And how have you been able to manage counterfeit products? So a lot of skincare products, once they're doing well, they have a lot of people trying to make fake products that look like it, but it's not it, and sell at lower prices to convince people to buy. How have you been able to manage the strategy?
Okay, so I will start with the sad part of the question before I go to the other part. So manage counterfeits. I don't have an answer to that. Totally don't. And please, if you do, anybody listening, please just let me know, because it's the toughest part of the business and it's the most challenging thing that I've ever had to face as a human. And why it's so hurtful to me, we don't even realize how much it's hurting our economy, because you try to build a business, a genuine brand that can go global and can put Nigeria on the map of international business, but you just don't have the governance to secure your business and to secure your brand, because there are no systems and structures to protect you as a business person. So it's very painful. We had a campaign a few years ago about the counterfeit and how the government should support us and all that. And I mean, I'm still complaining about it today. So the result to that campaign. How have we managed it all these years? I remember one time that 40% of my products sold in the marketplace, 40% was counterfeit product. And that could have potentially just destroyed the brand and destroyed the business and destroyed the many lives that depend on the brand and the business. So we keep forgetting that, because the counterfeiters are not paying tax, they are not interested in growing the economy, they are not interested in growing enterprise, So we really need the system and the government to support. I mean, there's NAFDAC, but they have limitations because there's no funding. And I'm saying all this because we've had to ask for help, and you have to use your money to fund NAFDAC to do your rates and all that. The only thing I know for sure is that my business is not going to go down. So that's what I say to my team. And because I just need to tell myself that we just need to keep fighting. And so that's why. So we just do what we have to do to get it out there. We still have counterfeit products out there. So from time to time, we do rates, and we have the scratch and call and pin thing. So that increases your cost too, right? Because you have to do all that. We keep changing packaging from time to time. We do awareness from time to time, more marketing. So it just increases your cost and all that. But it hasn't really stopped the counterfeiters, because what they do have is that they have distribution network. Very good at that. They have deep pockets and distribution network. So they just don't care about building their own businesses. So they wait for you to do all the work, and they kill your business, because I know a couple of businesses that they've killed, and they move to the next one, the next one, the next one. So it's just a sad sad thing that we really have to really focus on in our economy. But we keep fighting, we keep creating new products, we keep changing packaging, we keep doing what we have to do because we're not giving in to counterfeiters. So that's the only strategy that we use. So whatever it is that we have to do, we do. But it's not something that Zyron can eradicate and help. So that's for counterfeit. So it's a subject that I'm very passionate about. So you can see then, how have we managed through this period? Simple answer: technology and building better structures, really. We outsource manufacturing to China, right? So, and I remember when we started, we always had to go visit, had to create products, had to do all that. But I mean, how are we having this meeting today? If it were a few months ago, you'll be renting a hall, you'll be getting us, you do speakers, you do all the work, but we're just live on Zoom, right? So we found out that WeChat can do a lot of things. I mean, you know how the Chinese market is. WeChat has way more sophistication than most of the apps that are there. So we do communicate, we do create things, we work more. So we use a lot of technology. And because I always say that I'm a JJC when it comes to social media and all that, but my young people, it's amazing the kind of apps that are available. So for business people, so many apps, beauty apps, this app that will show the product how you want to show it, that will show. So we use a lot of technological apps to just do communication and just make it work and create better structures. So structures in terms of supply chain is a lot better, logistics is a lot better. So just having better and effective structures that actually work now has just made things a lot easier. And also you save costs because you don't have to travel as much as you used to anymore. So it might increase the time a bit, you know, some things you have to see, but I think technology and better structures has really helped us get through this period.
I think I've taken note of the fact that companies have to use technology to be able to scale up. And you can't find, you know, the counterfeit out there, but you have to keep making sure that you are better. So innovation is key for you to sustain your business. So my next question will quickly go to Mr. Furnace. So questions are like, you had to move from HR into this whole setting up this company. You know, how are you able to manage from just HR to setting up a high-end fitness facility in urban area? I also made that quickly too. How have you also been able to manage and meet uniformity of expectations across all iFitness Center branches? You know, there's one thing that I noticed when I work in, everything is almost the same. It's just that you're in a different location or area, but everything is optimized, the forms, the location, subscription, everything just looks the same. How have you been able to manage this?
Right, so thanks a lot. Done, thanks. So, I mean, moving from HR to, so first I was in sales, and from sales I went to HR, from HR, and in HR I did different things. I did compensation, I did training, quite a number of things, right? And then went into mobile electronics before iFitness. But I would say, I mean, just like Oki mentioned as well, and she went, you know, quite very in depth about, you know, her banking experience and how that has really shaped, you know, her thinking and stuff like that. I can relate with that very much. I think one of the things that we miss a lot around here is, you see, what builds leaders? They're the internal things, you know, strength, resilience, you know, intelligence, confidence, and things like that. Those things are learned, they're acquired. They are not, you can't fake them. You cannot even buy them. I mean, how do you buy confidence? How do you buy resilience? So the sum total of who we are the things that we've gone through. They're internalized. And so for anyone who is here, you might be a budding entrepreneur. You may have started, you may be planning to start, you may even be a veteran. You don't quite stop learning. We're all work in progress. And everything that we have learned somehow, some way comes to fore when the time, you know, when the time demands it. So my experience in HR, I was telling somebody who is very close to me, I was like, my experience in HR is perhaps one of the best that has helped me in structuring my two ventures. Because now I understand, you know, people management. I understand manpower planning. I understand recruitment. I understand, you know, learning and development, you know, compensation. things like that. But you see, when I was back then doing it, when I was just an officer, I didn't quite know that those things were going to be helpful in 10 years, in 20 years time. So whatever it is that we're doing now, you know, you can be in an organization and not be there. I see that happening to a lot of people. You're there, but you're not there. You're just showing up. You're just showing up. Don't just show up, right? Even if you're doing a small business and you're hoping to scale, don't just show up, right? Honestly, I kid you not. If I tell you that last year, things that we're doing in iFitness today, I find some of them very silly, you would think that is a joke. Just last year, and we're 6 years old. So imagine what we did 6 years ago. If at some locations that we had 6 years ago, if somebody gave us to us now free of charge without paying any rent, any lease, we would not take them because we've learned. But then that came with consistency. That came with staying true to the mission. So I'll say that, you know, the experience back in HR, back in the bank, doing sales in the bank, and then going to do mobile electronics was extremely very helpful. And in mobile electronics, I was selling phones, laptops, accessories. We had 5 locations. Yes Mobile at the time until I sold off to Udala in 2016. And I mean, then I was in a market that was red ocean. It's not like iFitness where you're creating the path. That market is red ocean. Red ocean means very competitive. The margins are very slim. Everybody's trading on very slim, you know, profitability. But then it was very aggressive, right? Because you were selling the same thing. My Nokia is not different from yours. My iPhone is not different from the next person's. So it was a thing of, there was a lot of price wars and stuff like that. Imagine leaving that place and coming to a new market that was entirely new, not product driven, nearly 100% service driven. So you see, for CEOs, for leaders, you can move from an automobile industry and go to fitness. I mean, I like what Oki said. She can't even do makeup. I was thinking that she's a champion in doing makeup. So she can't even do, you know. But you see, the key thing is their fundamentals, their principles, right? And what are principles? If I plant the right seed in the right soil and I water it, it will grow, right? It doesn't matter whether it was me that planted it or whether it was Oki that planted it or whether it was the moderator that planted it. If anybody planted it, right, watered it in the right soil, it would grow. Same thing. So I think that's what I would like to bring out of that experience. But you see, growing iFitness, several locations and counting, you know, ensuring systems are in place, quality is in place. I will say 3 things, because if we start on that topic, we'll probably not leave here today, right? 3 things. 1 is people, right? The right people in the right places. Remember, I didn't say just people. Neither did I say right people. Right people in the right places. It's extremely important for a business that is wanting to scale, especially when you are growing organically, right? For the most part. And when I mean people, I'm not just talking about staff, because it's very quick for people to think staff, employees. No. Everyone is got to identify what right relationships are needed for this business to succeed. So I love what Keith said about suppliers. You probably did not know that manufacturers are a very big deal for someone who's wanting to scale. You cannot afford to have the wrong suppliers. You cannot afford to have the wrong manufacturers, or else they damage your brand, right? What kind of investors do you need, right? I remember even advisors. So in the last fundraiser that we did, we had to raise investment, and I made sure that we had the right advisors. Why? In a previous deal, I had the wrong advisors. I got burnt. I lost millions of money, right? So when it comes to people, who are the people that you need? You've got to. There can't be 100 people, different sets of people. Maybe 2, maybe 3. Suppliers, staff, your customers. I will give them value, right? Investors, maybe advisors, maybe just 4 or 5, and they're very key, and they must be well managed at all times. Second, obviously, is systems, right? Ensuring that the right processes and policies are in place, and they are not overly too straining to the point where the business is getting too slow and cannot move, because you want to over process and put too many policies in place. So first is people, the right people, and I was careful to say not just employees. Second is systems. What kind of systems do you need to scale, especially when you are, growing exponentially? I don't know how much time I have, but I might just give a small example. Do I have like 2 more minutes or a minute?
I mean, we have 3 minutes to round up.
Okay. Okay, cool. So for us, we're building several locations, and it just means that we have to be very nimble when you were building those locations. So some things are just copy and paste. Why? Because we have built some systems in there. And the last thing, of course, is marry your mission. There's a lot of distraction out there, right? There are people that have come to us and they say, will you do smoothie bar because you have spaces? And we're like, no, we're just touching lives here. We are a gym, right? We are providing common, we're making fitness common, affordable, youthful, and functional. That's all. Anything else we will not do. We can outsource, we can have partners, but marry your mission. There's a lot of distractions out there. So if you put those three things together, I would say those things are working for us. There might be 12 things, but again, those are the top three: people, systems, marry your mission.
Thank you so much. I'm sure that most people listening out there are taking notes. I'm also learning a lot and I'm taking notes of everything. But we have less than 3 minutes to go. So I have a question from one of the listeners. She says, how is iFitness able to recruit effectively? And then she also has one question for the Zaron lady. She says, how is Zaron able to get distributors and what has been the strategy? I will allow you guys answer the question in 1 minute, and then I'll take my final notes in 1 minute extra, and we'll call it a day. Thank you.
So Felicia, I'll let you go first this time. Your question came first.
Okay, thank you. I wasn't expecting that. Okay, so how is iFitness able to recruit effectively? Well, I would say, thanks to our team, those who are in charge of this process, and also because I have some background in HR that's been helpful, but you see, there's some people who are in charge of doing this. And you see, it's not just recruitment. Remember that we don't quite have anything or any organization that is running the same kind of business we're running on this scale. So it means that you're having to bring in people who either don't know anything about fitness or who know just a bit, and then they have to go through our academy to brush them up and then send them to the front lines, which is a very tough thing to do. Because if you send somebody who's half-baked to the front lines, guess who's going to suffer it? The members, right? Up front. And the members are the ones that are paying, not the CEO. So it's going to be a big problem. So I would say, well, bringing in people who really largely don't have fitness experience, but then we're relying on our academy to train them. So there's a lot of investment in the academy. There's a lot of training that has to be done. In fact, we have to pay these people training allowances when they come, because some of them, maybe they don't have jobs, maybe they're just upcoming and stuff like that, and they're having to do 8 weeks in training school, right? So we have to put them on some kind of suboptimal payroll or sub payroll, just to ensure that they finish the academy, and when they do well, then they absorb. That's how we're solving that problem.
Okay. So to go into my question, thanks, Felicia. I've learned a lot from it, and we have to catch up after this. That would share more experience. And to answer that question, how have we managed to gain distributors and all that? So, like I mentioned before, when we started, wanted to create products that were, because understanding your local environment is very important. So, what would Nigerians buy into? What were the problems Nigerian brands had that did not make them grow or scale? One of them was quality, right? Nigerians did not create quality products. And if you have quality product, what happens? The price goes up, right? But Nigerians, with our spending power, is quite low. So we had to create quality products at affordable pricing, which is very, very hard to do. But we had to do that to be able to penetrate into the Nigerian market. So we did that, and we said, you know what, how do we distribute the product? And so it has to be available to the market. So one of the things that we did was working through the franchise scheme. And it was very, very, I think that was one of the best decisions that we've made, because we were able to create enterprise. And I keep saying that because we really were able to create enterprise, because the people we have worked with so far, and we tried to make sure that we were working with people that the business would change and transform their lives. So we were not so keen on just people that had deep pockets and they had money to invest into the brand. We're more keen in working with people that we knew that the business would matter to, and they'll be able to employ more people, and they'll be able to take the business to the next level. They would have their own level of passion for the business because it did matter to them. And it would matter to the people that they're employing and the business they are growing from buying into the brand. So just being able to have that eye to have the right people to work with, from Port Harcourt to Kano to Maiduguri to Makurdi to Enugu, and then just really making sure that we were able to just distribute and build businesses around Nigeria and Africa at large. So, and that was what we went for. So just putting it up on social media, distributors wanted nationwide. And you see a lot of people, and you start doing interviews and see, and since I'm not a makeup artist, so we were not so passionate about people that had just experience, but it was more passion, right? What would you do with this business if you owned it? How would this business transform your life and the people around you if you buy into it? So that was what we did, really, just trying to get our franchising. Then the distributors were cosmetic retail sales. And when we started, we had students, people that paid their way through school, just carrying Zaron products and around town and all that. So it was much more than just, CSR for us and just having a mutually beneficial relationship, much more than just having people that it didn't matter much to, or they already had sustainability and the business would not transform as much as it should. And it goes on and on. I mean, Felicia has talked about just human resource. He understands completely. Same thing, I always say that the Zaron brand has grown to where it is without any Harvard or any, high level educated person here. We just had to go with passionate people. And I understood on time that the best way to do it is having the right team that will be passionate and investing in that team, because Felicia, I'm sure you understand, is human resource and the talent is not readily available for the kind of business we have. So you have to make sure that you invest in your team and all that. And that has also helped. So we have passionate team that would go out there to even source for distributors. And the most important thing is that I always say I'm not a makeup artist, but make sure that what you don't have, get it. Get a resource that you don't have to make your business work. Stop looking for somebody that is like you to take over your business. Look for what you don't have, because you already have that resource. So look for a resource that is not available in your business to complete you as a business. Thank you very much.
Thank you so much. We have exceeded our time. I would just like you guys in 10 seconds to give us your final notes while I call it. Thank you. So your final word?
So my final word is to Nigerians.
Okay,
yes, I knew you were going to say that, so I already went. My final word is to Nigerians and everything we're going to, and please, business owners, just know that we always blame everything on the government. We have so much role to play in growing our country and our economy. Right now, everybody is trying to get out of Nigeria. Nigeria has huge opportunities. Please just speak it out this time. There's so much that is going to happen in 10, 20 years from now. If you go research, go read about it, we are a growing economy. The population is gradually increasing by the day. There are opportunities here. Please don't give up on us. You and I, we are going to grow this economy. So let's just speak it out and know that we can grow Nigeria. And it's not just the government, it's business owners like me and you that would grow, that would help in growing Nigeria. Thank you very much.
Okay, over to you, Mr. Felicia.
Thanks. So, I was wondering what I might say. So I'm just imagining the people on this call. I'm sure a lot of people here, you must be interested in business for you to be here. And there's something I stumbled on this morning that I thought might be inspiring, right? So Sarah Band says that the world needs thinkers and doers, but much more importantly, the world needs thinkers that do. There's a lot of doing that needs to now begin to happen, right? So you've heard all of these things. You've probably read a lot of books. You're probably still wondering. You may want to just take the next step, right? Your next step might be to link up with somebody who can help. It might be to get an advisor. It might be to get a mentor. Just take the next step, right? If that's all you take away from here, I think it might be enough, right? Because that will carry you to new levels, right? Otherwise, we just keep thinking and thinking and thinking, and we don't just take the next step.
Absolutely.
So,
thank you so much.
Thank you for your time.
The full time with you, Mr. Folorisho and Ms. Okay. I'm going to be handing over quickly to my colleague, Frank Elia, Head Technology News Desk, Business Day. He'll be taking over from here to handle the next panel session. Thank you so much, everyone, for listening. I have had a good time learning, and I hope that you also learned a lot. Have a nice
Linda and Tommy, can I say something? I've been like, don't say it, but let me just say this. My name is actually Okay. It's a Niger Delta name. It's not Igbo,
Okay.
it's not Yoruba, so it's okay. Yes.
Okay. Okay, I'm so sorry.
Okay.
Delta State, yes.
Apologies.
I mean, Nigeria makes that mistake, so yeah.
Apologies, please forgive us. Okay, so I'm going to take a short 2 minute break, and then I'll hand over to my colleague. Thank you all for listening.
Thank you.
No panicking, the worry they end today. Setting at the packaging, it cover you all the way. Whether na e-learning, whether na business, yo. Working is digital, working from home, you covered with TZ, yo. Streaming and surfing, gaming and chatting, calling unlimited. I'm living the life cause I get TZ, yo. Yes, sir. TZ, connected. I'm living the life cause I get TZ, yes, sir.
Hello, everybody. So you're welcome. My name is Frank Elia. I'm the head of technology for BusinessDay. Today, I'm talking to, I should be talking to about two people, but I was still expecting the second speaker. My speaker right now is Kendall Anai. And he's a founder of TZT Networks, which operates as Wi-Fi.com. He has a master's in electrical and computer engineering from the University of Victoria, Canada, and a bachelor's degree in electrical electronics engineering from the University of Benin, and over 17 years experience in telecommunication and information technology. Kendall has worked with two AA companies, ExxonMobil and Microsoft, as well as a Big Four firm, PricewaterhouseCoopers. Wi-Fi.com.ng is an internet provider operating in Africa that is leveraging wireless large bandwidth and plummeting cost of solar panels to create a low capex, OPEX network of owned and operated towers to offer disruptive customer-friendly pricing for unlimited internet. You're welcome, Kendall. Hope you can hear me.
Yes, I can.
All right. So we're just going to delve into time. We just have a few time to spend on this. But let me ask you the first question, which is, you're like a serial entrepreneur. You've been there in management consultant, you're a researcher, financial risk and derivatives software developer, engineer, seed investor, and now CEO of TZT, a broadband internet service provider, which I have used myself. Your experience goes across sectors and organizations at different stages of growth, size, and capital. The question is, why is scale so elusive for most startups? Is it one of those hard things about being a founder or an entrepreneur?
Okay, so yes, so just like you said, some startups, some have gotten to scale, right? We just got a startup that grown to become a unicorn, right? But majority of startups either fail or do not reach that huge scale that we're looking at. I think generally the first thing I'll talk about is capital too, access to capital. So there's not as much capital in the past flowing into the continent, but that has changed over the last 18 months. And we've seen a steady exponential increase in the amount of capital and even venture funds focused on investing in Africa. So but it takes a while between when you deploy capital and when you start seeing the rewards. It takes about 4 to 5 years for you to get to that level of scale. So what you're seeing now would manifest in 3 to 4 years at the minimum. And then even when you get the capital, how you can efficiently deploy the capital, because there's a lot of infrastructure deficit in Africa. So part of the capital that you're raising, you would use it to do other things that you typically will not do in the developed parts of the world. For example, for me as an internet provider, I have to build my own infrastructure versus a new internet provider somewhere in the developed world would have to just leverage existing shared infrastructure, right? Then the market itself too, it's at the major cities, yes, you have people with a lot of disposable income. But by the time you leave the tier 1 cities in Africa, you have tier 2 and tier 3. All of a sudden, that product that you started off, or service that you started off delivering in the tier 1 market, you have to adapt it for the market because you're now going into a place where they're more cost sensitive. And that's the majority of the market in Africa. Then third thing would be starting off with a local focus, but you not a lot of startups have reached that scale where they're Pan-African. So you start off your business, you've done a few years in it, but you're focused on your local market. The quicker you can get to where you're now building across multiple markets, the more all of a sudden that you can access a lot larger market and then grow to scale. Then we also, even though we don't talk about it a lot, there's a little bit of language barrier around the continent. So there's an English speaking, just even like focusing on West Africa, there's English speaking West Africa, and there's French speaking West Africa. So if you deliver the service or the product that is just tailored to English speaking, you need to be able to cross that language barrier and also be able to tap into the French speaking parts of Africa, and also go beyond just the region itself, beyond West Africa. So if you're not able to do that very quickly, you won't get to scale. Then fourth thing will be M&A. M&A needs to start happening. That's mergers and acquisition. We have a number of startups, multiple startups working in the same area. Some are doing very well, some are not doing as great. Some are, even though they're not doing as great, they're maybe good at some particular vertical, right? So what usually happen outside of Africa will be investors will try to bring these businesses that have synergies together, but not a lot of that has happened in Africa. And the thing is, when you sum the total of these two businesses, maybe via an acquisition or merging the two of them together, you get a larger business that can potentially scale a lot more. Then founders too, we need to find entrepreneurs that are taking risks, but we need to also be bold. So one thing is taking the risk of being an entrepreneur, but another thing is being bold, which is actually go for it, right? Then I know this one has been reflogged by everybody, even the last panel, human capital too. If I asked, if I wanted to hire someone that had scaled telecoms business across Africa, there are very few people. They'll be working in the large telcos. And it'll take a lot for them to come work for you. So you have to improvise, as the case may be. And that's obviously facing, other startups are also facing that in terms of looking at developers and all of that. So those are the points that I think have prevented a lot of scale, but that will change over time. Okay, thank you.
Okay, so let's look at the funding aspect of it. Over the years, we've had early stage investors like Y Combinators in startups in Nigeria. TZT was a part of Y Combinator. You had Baystark, you have Cowrywise, and quite a number of startups have gone through and Y Combinator and the likes of it. What's your view of the role that accelerators like Y Combinator play in terms of helping early stage startups grow? What's your view? And what was your why you were there?
Oh, okay. Very great experience. Best thing that ever happened to us, because we had tried to obviously we bootstrapped our business, and we're at a point where there's so much you can do with bootstrapping where it's starting to affect your growth and you want additional funding into the business. But getting to YC was pitched as, additional capital. But in actually going through the program is a lot more than that. First of all, you come in a batch, which means you have this support group within your network. I think our batch, we're about 5 companies in that batch, and within the founders, we're really closely knit. And there's this healthy competition and also sharing within that, and then opening up of network. So you now have 5 companies that each person's network within the continent, you're able to leverage that. And just even if you're thinking of just those 5 companies, and when you think about the alumni network, Y Combinator has, all of a sudden you have, if there's anything you want to do, there's people you can reach out to very quickly. Then even within YC, within the 3 months there, every week we will have these weekly dinners where founders in Silicon Valley come to talk to us and share experience. So it's similar to what you're doing with the Founders Fund, but think of it at a higher frequency, like every week. So, and these are people that have you've seen on Twitter, you've heard them talk, all of a sudden they are right there in the same space with you, and you have the ability to actually walk up to them after the dinners to actually share the experience. And they're very candid, share the real experience. It also helps you understand that, well, okay, all of a sudden I can actually be that person if I do the right thing. Then they take you through other things like team building, hiring the best people, which is very, very important. Do things that don't scale. One of the things we got out of YC was we're able to figure out that people can pay for internet even without seeing it. So where we were normally charging before, we've now figured out that we can get people to pre-sign up. That's not something that you would normally think. And then they teach you things about growth. Growth is very important. Every week you have to report your progress, right? And if you don't measure anything, you can't see the impact. So you're watching your growth, you're seeing yourself grow up and to the right. There's a session on marketing too. And also ultimately preparation for demo day, which carries you throughout your post demo day, because they teach you tips on how to fundraise. And back then we raised $2 million out of after demo day, which was at that time was one of the largest announced seed rounds, right? And this happened in the space of 2-3 weeks, so we went from not raising, having one term sheet in Nigeria for $1 million to raising $2 million in about 3 weeks. So the impact, as you can tell, is a lot, and this has carried through more the modern past our seed round.
Just to follow up on that train of thought is, given that Y Combinator can only just take just the size of Nigerian startup that they can take, and Nigeria has the largest tech startups in Africa. Given that the Y Combinator would not have to take all of them, do you think it's a disadvantage that we don't have local investors plugged in the early stage like we have, say, in markets like in the US? And we're also beginning to see Egypt and some other African countries begin to build up their local investors network. Do you think it's a disadvantage?
So 5 years ago, 2016, 2017, 4 years ago, that was relevant, but now that has changed. You've seen development finance institutions fund funds that are focused on Africa. There are folks like Patek that Africa. There's even on the early stages Ventures platform, which also is an investor in TZD. There's Ingressive Fund, which is also an investor in TZD. So as far as I'm concerned, the seed stage is the best it's ever been. There's no difference really if you have a great business, getting funding, you can raise a seed round the same way we raised the seed round in 2-3 weeks. Very quickly. It's even now very competitive. What you would see now is investors grumbling a little bit that there's a lot of competition to get allocation. So that seed state has changed. But what hasn't changed is the A-B, around the B, Series B and upwards. That's where it's still a little competitive and still challenging. But if you look at the trend, that would also get better over time. So the DFIs are doing what they are doing. They're creating the fund. There's one new fund announced almost every other week. I just saw one, just raised 100 million and it closed. So hey, there are a lot of funds. This is the best time to start a business ever in tech.
Okay. What I wanted to also ask you is, you are an entrepreneur and as well as also an investor. And one of the companies that you invested in, Flutterwave, became a unicorn. Then you also invested in Paystack, which was also bought by Stripe. What did you see in the early stage of these companies that made you invest?
So Paystack one was a case of, I had a challenge, which was my business being a subscription model. We wanted to, the regular, the incumbents at that time wasn't really working for us. We wanted something that could do recurring billing. And then when Paystack launched, I got introduced and we integrated with Paystack. We loved it. And that was the same thing we're seeing around all the early customers. The early customers really liked them. This was without any kind of marketing. So I don't think anybody, up until they did the billboard a few years ago, you would not see anybody advertise about Paystack, but you could see on Twitter, on Radar, Tech About Radar, that a lot of people just kept giving rave reviews. So for on my own part, that was one aspect. I was okay, there's building a community of developers that love them. But even on the product side, on the adoption side, we saw that our users started making a lot of payments, and our payments were growing exponentially. And for me, I said, well, this company is going to be a very big company. We didn't think about it the way people think about investment. Oh, I didn't think about it the way people think about investment, which is going to be a huge exit. I just came from a point of, I love the product that we're offering, and a lot of people love it. And for me, I was like, okay, this is an opportunity. I know the founder. Let me support as best as I can with the funds I had at that time. I was still working in Exxon then, and 5 years down the road, they sold for $200 million. Same thing. If you had told me that I would have even been this soon, I would not have guessed. So yes, it was huge. Then on Florida Wave's own was right after I invested in Playstack. A few months down the road, I wanted to introduce Providus Bank to folks in the ecosystem. So I took them down to CC Hub, and just before the meeting, I had written to a number of founders saying, "Hey, I'm coming to Yaba. There's this bank that is going to be focused. I want to work with startups. Is anybody interested?" So I'd emailed one of the founders of Florida Wave, and I didn't even know anything about Florida Wave. So he just left his former startup, which was Andela, and he said, "Oh, I'm working on something new. By the way, we'll talk about it, so I can meet up with you guys." And then for me, I was like, okay, he's working on something new. That means he's a second-time founder. The first one did very well. Probably it's something interesting. And I set up a meeting with him, and he talked about Florida Wave, which is similar to what Paystack was doing. And so for me, it was a case of most people were trying to decide which one to invest in. I was like, why am I trying to do? I believe this market is huge. There's always multiple people that can do the same thing and win equally. And I then also put in a small investment in Florida Wave, and both companies had done really well. But what was similar about them is they were going after a market, an infrastructure business just like mine, which is they were building payments infrastructure. So they were not an application, because usually most of the startups you're now seeing are now applying some of all of these tools. But at the foundational step, they were infrastructure business, which was what I liked them for. And they also there's this huge market that they were trying to tap, which again, if you have a huge market, you can build a really big business out of it. And then over time, I also saw them move past just not being a Nigerian business and being a Pan-African business, which are some of the things that you should look out to when investing. I think one of my regrets is not even continuing to invest as they grew alongside, but because I was now focused on my own startup.
Okay. So let me pause you there and introduce our second speaker. That's Obinna Ekeze. Obinna is a retired professional basketball professional, one of the early Nigerians to break into the American NBA. A serial entrepreneur, he pioneered Nigeria's first digital travel platform, Wakanow. Beyond Wakanow, he has gone on to co-found Transbox Technologies, a company based in Nigeria. He has also founded recently OBN, Basketball Academy. Transbox Technologies utilizes a large network of software engineers to provide IT solutions throughout Africa. The business specializes in developing artificial intelligence-based platforms for hospitality, insurance, and financial institutions. And like I said, he recently unveiled a new company called OBN. I think it's a foundation. Am I right, Mr. Obinna?
Oh, thank you, Doc. Can you hear me?
Yes, I can hear you perfectly.
Okay. Yeah, thank you very much. It's an academy to build on the foundation academy. Like you said, I used to be a former basketball player.
Yeah.
It's a huge fan of just like everything else in Nigeria, we have a huge potential for talent in Nigeria, but no one has really, invested in the infrastructure required to develop this talent at the local level.
Yes.
Most of us that played basketball, we were fortunate to go to the United States to play. We had to develop most our skills when we got to the United States, and I think that if we're able to start at a much younger age, we will be much more talent developed as our skills by the time we get to the United States. So the plan here is to start these kids at a very young age, from the age of 6 to 18, and then by the time they get to that university level, they will be able to earn a scholarship from some of the top universities in America, which is what I was able to do I studied mechanical engineering and business on a full basketball scholarship at the University of Maryland. So, and then from then on, I was drafted to the NBA. So it's really a huge opportunity we have, and with the whole Nigerian economy, the net population of Nigeria has mostly made up of young people. It's high time we really start investing in development of our young people. I'm really proud of the fact that the music industry has done very well in creating the entertainment industry, but I think there's a huge gap in the sports development industry, and that's the area I want to play in.
Okay. One familiar thread in most of the businesses that you've founded and gone out to run is that they usually scale, sometimes early, but there's just been this familiar thing about them scaling and all that. How are you able to achieve that? Achieve network economies in such a short space of time?
Well, I truly believe in the use of technology in everything that we're doing. Technology plays a huge role in being able to scale faster. Everything I do always involve technology. So if you're talking about the company which I founded, Wakana, we're really the first company to really invest heavily in technology. We worked on developing payment and gateway, completing the payment gateway with InterSwitch. At the time we started, InterSwitch is a very, very young company. I think we're probably the first company that actually worked on completed their online payment gateway for them with WebPay. And so we're talking about 2007, 2008 here, so there was really nothing on ground at that time. So we really worked on the payments system, the banking system. So we did the whole ecosystem of what we needed to be able to drive sales online. So a lot of the work we did initially was really to build the infrastructure, whether we did it ourselves or do it with partners. And obviously we did a lot of work in terms of contracting with the partners, with the airlines, the hotels, and the rest of them. So we did a whole ton of heavy lifting in the beginning, and that's by the time all of this infrastructure was built, then obviously we were able to do quite a bit of work in terms of digital marketing, and then obviously demand is there when you talk about a huge market like Nigeria when it comes to travel. We're able to offer customers really good deals and use technology to do stuff like packaging and stuff like that, and it helps build business very fast.
Oh, okay. My second question is, looking at valuation, you'll agree with me that we've come a long way, say in the tech industry and in every other startup industry that we have out there, from when investors used to come one by one to now, when we now have investors coming like every month. In 2019, Nigerian tech startups sort of swept off the whole carpet on funding. We've seen it starting to repeat itself, say in 2021 and all that. Do you think that that this is a trend that's going to continue, and or do you think it's a one-off event? Is this going to be a bubble or something?
Well, I think if you ask me, I think the opportunity is there. I think for a lot of the tech companies, I think there were some really good deals that happened last year with Paystack, and I know recently now with Flutterwave. I mean, these are really infrastructure businesses, and those are huge. I think those are great businesses because they actually have the opportunity to scale their business even beyond the borders of Nigeria. If you're talking about the Pan-African opportunity. One of my biggest regrets was not investing in those companies because some of those guys some of you actually approached me early in the early stage, and I just was so focused on Wakana at that time, was so busy. But those companies have done tremendously well. But there are definitely opportunities in Nigeria to invest in the tech space. I think that Nigeria is such a huge market. And you look at Nigeria's position in Africa, you can't neglect Nigeria. So when you talk about technology, there's definitely huge opportunities. But obviously, you have to take it and in single. The opportunities that each companies of those companies, and then their actual scalability, and then who is managing them, basically who are the founders managing them. I always think I always believe there's always a huge be more importance given to who the founders are and how they can scale their business, because it just seems like sometimes people underestimate the power of a founder and when creating that vision, and I think it's extremely important.
Over to you, Kendall. I find it often difficult to maybe try to explain why Nigerian tech startups are becoming the major attraction for investors. So we've had a Paystack bought over by Stripe, we've had Flutterwave, but then also there's a recent report that showed tech ecosystems in Africa. Nigeria wasn't among them. Nigeria wasn't among the top 5. Nigeria was like 6th. So, but even though we have the largest number, why do you think we continue to attract a lot of investment in Nigeria? Yes, Obina has said that we are a large market, so investors cannot afford to ignore it. But it's there another thing that makes us that attractive. I've had some founders who said maybe the Paystack exit sort of is also driving what is happening now. What do you think is responsible for all the investment coming into the Nigerian ecosystem?
So markets, you can't dispute. Market is one of the things. 200 million people at least. Anything you want to sell, even if it's $1 that you're getting from everybody once a month, that's $200 million in revenue for any business that can get to that still. So market is number one. But I think also exits help, right? So they've seen the story start to end, right? It's one thing to invest in companies, which other people have done in the past, but it's another thing to see a huge return on investment from those that took those risks early on. And the fact that, yes, we also have, if you're saying Africa has the longest has the world's youngest population and 2 billion people, and Nigeria is 200 million of that 10%. So Nigeria's market also has one of the world country with one of the youngest population too. So most of the services that are related to tech can actually, you have the market for people that can, you can provide that service to. And then from the founders too, by Nigeria, by how difficult it is to execute. Once you've executed in Nigeria and you're a breakout star in Nigeria, the rest of it is just straightforward. It's like a walk in the park. I'm not saying that other countries are easy to execute, but if I compare my experience starting up in Nigeria and Ghana Wi-Fi in Ghana, it's like it's way, way easier. There's power in Ghana, so you don't have to deal with building power infrastructure every time you're building a tower. And so all of a sudden, the things you did in Nigeria, you can actually grow really fast once you're outside of Nigeria. You tackle the most difficult market, the most competitive market in everything you're doing. So that way you as a founder, you're building grit. And those are the things that are required to be bold, to be able to build a big business.
Okay, to you, Obi, what as a founder gives you a sleepless night in Nigeria as an operating as a founder in Nigeria? You've got you had Waka Now, and then you had Transbox, and then you now have OBN. What gives you sleepless nights in as a founder in Nigeria?
Well, I think two things I would say. Just the infrastructure deficiency in Nigeria is very challenging. There's a huge issue now with power, and especially for a startup company, it's very, very difficult to break that. Actually, the cost associated with power is very, very challenging in new business. Then you have to talk about human resources. And you find the right people, is always challenging, and getting the right, person for the position. It just seems like now I'm not saying generalizing everybody, but it just seems like the younger people now just, everybody's looking for getting money or getting paid without really giving much value. And that is some of the biggest challenges any entrepreneur is going to face. Now, how do you find people that have passion to just give value and improve, and also who are fully dedicated to the role that they claim that they can perform, and that is some of the challenges that I think that are very difficult for an entrepreneur now. Maybe Ken can talk about his own, but I think my own is just there are two things. Obviously, you talk about financing and those kind of things like that, but you just have to decide, what kind of financing you want to take or you want. But my company, so what at this stage, my journey, what I achieve, and how I forward. But I think the other things earlier issues I mentioned are the paramount issues we have now.
Okay. To you, Ken, I think he has mentioned infrastructure. I think I want to take it up from there, which is that you are a Wi-Fi company. You provide Wi-Fi services to your customers. And since last year, we've seen the federal government try to push right of way so that fiber cables can be deployed across Nigeria, so that we can have more broadband accessible to everyone. But we've only had about, say, 6 states come out and say, we're going to reduce it, But then you are a service provider, you are an operator in this industry. How does these little, should I call them little, or should I say these regulatory bottlenecks affect you as a business, as an operator in this industry, in deploying infrastructure, I meant to say?
So telecoms is what I'll call mature. They've been around for 20 years. So in terms of regulations are really well spelled out. A small provider like me can easily get the permits required, licenses required, spectrum required to operate your business. And the moves that you said the government has made with right of way is really, again, there's always never a good time to start on something, but it's always also good because if you look at what has happened in the last 1 year with people working from home, the internet requirement has skyrocketed over time. I remember us celebrating at the beginning of last year, doing 100,000 gigs a day. But 6 months later, we're doing 150. So it took us how many years from inception to get to 100 and to already grow by 50% to get to 150,000. So we're at the position where we had to carry out significant upgrades in the middle of the pandemic. Like we had to go from 1 gig to 10 gigs infrastructure. So all of this fiber that is being built is really helping. We're hoping to be able to get to fiber to all of our towers because that would improve the quality of the service over significantly, dramatically. And then just to piggyback on infrastructure, right? Infrastructure is capital intensive, and we all agree that capital is a big problem. But for me, I've been able to build our business where we've minimized FX risk. But even as much as we've tried to minimize it, if you're going to grow as most businesses in Nigeria, right? You're going to import equipment. So all of a sudden, the FX risk still comes to meet you at that point in time where you're growing. So if I'm going to grow by double the number of customers, all of a sudden I have to source double the amount of FX when my revenue is in Nigeria, is in Naira, right? And then you also deal with, I'm trying to raise capital debt financing because I'm in infrastructure business, I have to decide between raising in foreign currency, which obviously has killed all the people that came before me that tried to do that, and then raising in local currency, which has been very good in the last 6 to 8 months when rates went down significantly. But rates have started to go down. But I believe that I would love the rates to still be low, so that local businesses that need access to working capital from the market locally can actually access it instead of looking at the easier route, which is going to lend, get debt, foreign debt, which, trust me, there are too many horror stories of people that once the rate moves against you and your revenue, so the rate can move against you 15% and your revenue didn't grow 15% of your revenue. All of a sudden you're in a worse position through nothing that has to do with you or your execution or your team. It's just forces that you can't control, right? So that's really just, I know he had asked what keeps you up at night. I just hope the FX rate just stays around where it is now for at least a year or two, so that we can grow past, we can continue to grow and be in a better position and a financially healthier position as a business.
Okay, so Obi, I think this will be my last question because of the time. How important is collaboration to a founder? you've practically grown most of your businesses on collaboration and all. Just how important is that to a founder? And is there a place to draw the line? Say, no, we're not going to, as in collaborate here, we're just going to run it on our own. Just how important it is, and where is the line when you're making business decisions?
Yeah, so collaboration is extremely important, especially when you're trying to grow the business. But you have to pick the partners you want to collaborate with very carefully. Usually, and people always say, can competing brands collaborate, or can you collaborate with which kind of people can you collaborate with? I always think that you have to collaborate with people that can help grow their business, and also they can help grow your business. So those are the most important things when you talk about collaboration. For now, like if you look at our business now I'm focused on sports, on basketball actually. There's some collaborations out there that I think that are very, very important, that we can, we can both help both our organization and the other organization grow. So it's very, very important, but it's very, very important you pick your right partners and you like people that you want to collaborate with. So it's very, very important. And to be quite honest, it also saves money in terms of things like marketing, because a lot of people ask, how do you spend so much money on marketing and all that kind of stuff? But if you have a partner that has a database of, a significant database, and then you have a significant product or some service that they can get, if they use your own service, and you guys can exchange those kind of things, those kind of deals usually work out very well. But you have to make sure it's a win-win. The other party has to get value, and you also have to get value. So as long as both parties are getting value, is something that can be sustainable. So it's definitely very important. But like I said, all these factors have to be taken into consideration, and and those agreements have to be put in place.
Okay, Kendall, my last question is, we have seen two unicorns in Nigeria. We've seen InterSwitch, we've seen a Flutterwave, and each of them didn't go through the IPO route. Each of them were through investments, So is this a trend that we're going to keep seeing, or are we going to eventually start seeing IPOs, say on the Nigerian Stock Exchange, or maybe them going to London or US Stock Exchange?
Before them, we can add Jumia. I don't want to get into whether it's African or not, but you can add Jumia. They went through the IPO route. But both routes will take you towards $1 billion investment, being a $1 billion company. I think for me, it's really internal to the company where they see themselves, whether they're ready to test the public markets, because the public markets is different. If you look at Jumia's experience, immediately they went out there, short sellers went after them, published a report, and over time they recovered from it. But if you don't have your act together, as being a public company, all of your information is out there. You have to be sure that quarter after quarter, you're able to have consistent growth. If you're still figuring out other aspects of your business, you can't actually go public yet. So I think it's a case of, as our businesses mature and people feel that they are ready to actually go through with the additional scrutiny to become a public company, that's also very good. And there's also a positive side to being a public company. You can raise additional capital whenever you need from retail investors. All of a sudden, you're moving away from just private and institutional investors to anybody can buy your company stock. But there's additional regulatory overheads that are required with it. Even going public, the cost of going public, at least $1 million in expense in that year. So you want to be sure that you've reached the point where you can actually meet the expectations of what it requires to be a public company. We'll see a lot of them. I know I've talked to a lot of some of the ones I've invested in, Kuda Bank, that folks that have those ambitions, like they want to build really large businesses, and it's just a matter of time. So I'm saying, if I'm going to be quoted, I'm saying in 5 years there will be a huge Nigerian founded company that would go public in any of the major markets. And yes, my advice to everyone, if you're listening to me today, is try to make an angel investment, one at least a year. I was lucky to have done that early on in some of those companies, right? And businesses need capital. So I know as an individual, you have different things you're investing in, treasury bills and all of that, but try to support one tech company every year. You'll be surprised that the return on one of them would even outpass all the investments you've made over the number of years when it happens, because it's happening, it takes time. I know this was one of the things I put around me when I tried to make the decision to leave ExxonMobil to become a full-time entrepreneur. I just told myself that, hey, even if this doesn't work out, maybe one of my investments will work out. So and then right place, right time. And so, yeah, that's my advice to everyone. Because it's going to happen.
Okay, thank you very much, gentlemen. I understand we don't have time anymore, so I'm just going to hand over to Mr. Austin Okere to give us the last statement. Thank you. Mr. Austin, if you're there.
It's been lovely listening to you for sharing, Obina and Ken. I learned quite a lot. And thank you, moderator, for your excellent line of questioning. Look forward to the next session with Professor Michael Alter.
Thank you.
Okay, so let me start a brief introduction of Michael Alter. I can see that he's already here with us. So Michael Alter is a clinical professor of entrepreneurship. He was an executive chairman of Vanco, the largest provider of electronic payment solutions to the faith-based and education communities. Michael was a co-founder and CEO of SurePay Payroll, which is a SAS or SaaS technology company that is now wholly owned subsidiary of Paychecks. Alter co-founded SurePay in 2000, way back, after 6 years as a consultant with McKinsey & Co. And prior to receiving his MBA from Harvard Business School, Alter worked in various positions in IBM. He holds a bachelor's degree in economics from Northwestern University. He is an active board and advisory board member for leading industry and entrepreneur organizations, including Vanco, which is a leading payments provider to the faith-based and education communities, MAX Digital First Look. Alter is a member of the JGRF International Board of Directors, a member of YPO Gold, and a former officer of the Chicago chapter of the Young Presidents Organization, a past recipient of the Illinois Technology Association City Light CEO of the Year Award. Alter has been a nationally recognized spokesman on business issues, having served as a columnist for Inc.com and appeared regularly in media outlets nationwide, including Bloomberg TV and the Wall Street Journal. Welcome, Professor Michael Alter.
Thank you, Austin. Thank you for having me. It's exciting to be here. I should say this is my first time in Nigeria, so thank you for having me.
It's your first time digitally in Nigeria.
Yeah, exactly.
Particularly after the pandemic.
Yep.
So this should be your classroom where it's very impressive.
Oh, this is one of the University of Chicago Business School classrooms. I figure it's a good background.
It is lovely background. So a lot of us have been anxiously waiting to learn from you. I wouldn't take too much time, but to delve very quickly into what we can glean from your wealth of experience. If you don't mind, I'll ask you quite a few questions. Mm-hmm. And if it's time to take questions from some of the participants.
Great.
So the first question I'm going to ask you is regarding the course you're teaching, entrepreneurial selling. And could you tell us a bit more about this course?
Sure. Sure. So I teach a class called entrepreneurial selling. And interestingly enough, in the business school here at the University of Chicago. It's actually the only selling related course that we have. And the course came about, if you think about one of the things that we do really well here at the university is we help people figure out how to scale and grow their businesses, how to run major multinational organizations, think about strategy, capital formation, operations, all of those pieces. And over the last few years, we've been adding, by the last 10 years, a lot more in the entrepreneurship world. But again, a lot of that is in strategy, business model formation, and it's, in a sense, putting together your pitch to go raise money. And the challenge is there's a big gap between raising some money and capital and having an idea, and actually, as you know, Austin, very well, having a business. And I don't believe you have a business until you actually have people paying you money for something. And so what my class is really designed to do is to help the students understand, how do we go from, if you excuse the more crass nature, a PowerPoint set of slides and an idea into something where people are actually paying money that is starting to grow. And then a lot of the other classes in the university pick up from there in terms of strategic dynamics, organizational behavior, and things like that. And so that's what I teach. It's a very practical, tactical class.
Fantastic. Very similar. I teach a course at Columbia Business School called Foundations of Entrepreneurship.
Mm-hmm.
I would say that the selling piece that you talked about is very interesting, and I might just introduce that into that course.
I'd love to have an offline conversation and hear all about your syllabus. I'm sure I would learn a ton too.
It would be my pleasure. So let me delve and change gears quickly and go into a different area. So you, Professor, are one of the rare breed of business school professors who have held executive leadership positions at the very highest level, making the switch to academia. In what ways has that affected the value that you bring to the classroom?
Well, I think, one of the things is a lot of gray hair that I bring. You get that in running a business a little bit more than in teaching. But I think what's probably a value add for me is, in a sense, I've paid a lot of the tuition that the students are paying. I just have paid it in businesses that I've been running to learn about a lot of things. And so, you learn a lot from your failures and from trying things. And in business, to me, a lot of it is sort of inertia and getting the business moving. And sometimes you make wrong decisions and sometimes you make right ones. And the best operators and entrepreneurs correct as they go. And so things keep moving forward. And so having a real sort of practical experience of, here's the theory, but here's how it actually works. There is some nuance there. And I think that's something that I'm able to bring to the classroom, having seen the movie, so to speak.
So on this point, just this morning, I was speaking to Professor Tim Mescon from the AACSB, which actually is an umbrella body to which a lot of business schools belong. And he was talking about Global Business Practice Council, where bringing town to meet gown. Do you think that there's been enough meeting of minds between town and gown?
I think there can always be more. And I think we're starting to see some of that, but I think I would like to see more of that. I think, you've got a broader other picture, which is, as you try to share practices, you've got academia in different countries with different cultures. And as you try to share those cultures across, some of the academic things can be a lot harder as you try to make it much more practical in the business world. And so I think, if you're talking about a core finance concept like the net present value, I think you can more easily and practically share that and adapt it. When you're talking about things that are more sort of dynamic and interactive with other people around sales, that's where sort of bringing those two things together is a little bit harder because of some of the cultural differences you see.
Yeah, thank you very much. Let me talk about company success. So you were a co-founder and CEO of Shopero. This is a company which you grew into a successful mid-sized company. I mean, how mid-sized it is, with 115 million in annual revenues. That's quite big. 160 employees and over 30,000 small business customers. Now, if you have to pick the most important factors that determine the company's success,
So I think a bunch of them. One of them is certainly a little bit of it's better to be lucky than good. So I think some of it is a little bit of luck. But I think, if I break it down, I really do think there's probably 4 areas that really make, and when I look at any startup, I talk and work with startups and growth stage entrepreneurs all the time. That's pretty much all I do. And to me, one of the biggest things that I look at is the market in which they're playing. Is it a big market? Is it a growing market? Because it's hard enough to grow a business, but it's really hard to grow a business in a shrinking or a bad market. I would much rather take my efforts and my energies and grow in a big growing market. I think some of the panelists just before me were talking about some of the tech spaces and tech opportunities. Those tend to be great markets with strong margins and growth opportunities. So I think that's the first thing. The second thing is, if you're going to build a business, you need to have something differentiated about your offering that is truly different. And a lot of that is not necessarily features and functions. It's much more, to me, about, can I deliver a unique and better customer experience than what they have today? Because one of the biggest challenges that you have in building a business is getting people to switch from whatever they're doing today, the status quo, to something new. And that's always a much harder challenge, I think. And people are doing something. It may not be anything close to what you're offering. And so making sure you have a better experience that makes sort of the need to switch so much greater. So you've got market, you've got a great, better differentiated experience. I think the third team is, you need to have a good team. I didn't do anything alone at SurePayroll. I almost used to say I didn't do anything. All I was able to do was get lucky enough to hire some really good people to work with me who became more and more expert in their areas. And I tried to stay out of their way. And so the better your team, the more successful you'll be. I know it's a little trite, but it's absolutely true. And so getting a good team. And then the fourth one is a little bit out of your control. And maybe it goes back to my luck point, but there's something about timing. If you look at industries and you look at businesses over time, some people are just too early for their space. And so being at the right place at the right time is really critical. Think about an example here in the US, maybe 20 years ago, when the first .com boom was up. There was this company called petstore.com, and they were going to sell pet supplies over the internet. And they spent millions of dollars trying to build their brand very quickly in TV ads. They had a couple ads in the Super Bowl, and it turned out to be a spectacular failure. It never worked. If you roll forward to 2021, we have a very successful online pet store called Chewy.com here in the United States. It does phenomenally well. And I think it actually even I think it's now owned by one of the traditional pet companies and pet stores. And I think it's actually more of the profit and revenue. And so if you think about it, what's really different about that? It's both selling pet supplies online. What's different is that the timing is different. The infrastructure has changed to make it more readily available now. 20 years later in the US, people are much more comfortable buying online. We have the data infrastructure and the bandwidth. We know how to do a user interface to make that happen. We have delivery and logistics. And so a lot of that has to do with timing. And so oftentimes entrepreneurs tend to be visionaries. And so they tend to be a little bit ahead of their time. And so one of the challenges is, how do you slow down a little bit to educate the market before you spend all your money trying to sell and market when the customers are not developed yet and there yet? And so balancing that is always a challenge. So those are the 4 things that I would say: timing, market, people, and having a differentiated experience.
Fantastic. So we'll keep those up our sleeves for application going forward. So I'm going to want to be talking to you about culture and kind of culture and at what time to switch. So, companies of all sizes talk about culture, and I think culture is a very big piece in galvanizing the team together. But all cultures are not the same at all levels of growth. So if I'm an entrepreneur, how does that startup culture differ from that at a large corporation, 1, and 2, when should a founder or a board know when to insist on the switch of culture?
Okay. So, and when you talk about switch of culture, are you talking about a switch of people or a change in how the company behaves?
It could be both.
Okay. So, I think to me, oftentimes what we see is people confuse the sort of people running and in the organization and their skill set at sort of running a business of a certain stage with the actual culture of the business. And to me, the culture is, it's a little bit more around sort of beliefs and traits and how we act and how we operate. And so oftentimes in an entrepreneurial company, you hear about a culture that's scrappier. They do more with less. There's very limited job descriptions, right? Everybody is a jack of all trades because, you know, the CEO has to take the garbage out at the same time they actually have to make the first sales and make the product because there's just nobody else. And so as the business gets bigger and bigger, you have more and more jobs and definitions, and it's harder to do everything. You go almost to a specialization, if you will. And that's good and bad from a cultural perspective. But I think what happens that's really a challenge around as an organization matures in the culture is when the sort of C-suite or the ivory tower loses sight of actually what's going on with the customer. And they end up thinking that they're above doing certain things, right? I would never pick up a phone and talk to a customer. I'll let the market research tell me what the answer is. I'll let my salespeople go out and sell. And so there are businesses that do that, but I think those are the ones that are most challenged. So I think no matter what, from a cultural perspective, you really have to be listening to the customers that you're serving. Having said all that, if you're an entrepreneur and you're starting a business, I would define what are the kind of 3 or 4 core characteristics I want my business to stand for. And they reflect who I am as a person and what my values are, the easier they're going to be for you to drive that through your organization. So some people might have a bias towards analysis. Other people might have a bias towards action. Some people might have a bias towards sort of greater fairness than economic return. But sort of what are those things that you stand for? Some people want to create their business to be more like a family, and they're creating jobs and opportunities for people, and how they respect and reward and think about that is important. Other people are just, quite frankly, could be doing it for wealth. And so all of those things sort of play into your culture. But I wouldn't confuse culture with, as the business is going, one of the biggest challenges that an entrepreneur has is it time for me to bring in a new leader, or do I keep going? And so I don't know if you want to spend a minute or two talking about that or not. Or
I will talk about that in a minute, but I want to hold you to this culture piece. So you've been involved in many startups. Is there any one of them that you would like to use an example to drive home this point of the different cultures and different stages?
Sure, absolutely. So let me use Sure Payroll because I think that's a good example. And so what this was is it's a little bit of a U.S. based concept, but it's all around in the United States. The government taxes from individual citizens are collected through the payroll system. So when I, as an employer, pay you, I take the taxes then. And so in a sense, what that means is every business is an unpaid tax collector of the U.S. government. And so you've got this responsibility, and there's no value in doing it better than somebody else. So people outsource this to companies like the one I created. And one of the things we do is we pay the taxes, but the other thing we do is we pay the employees, and we pay them a lot of the time through an electronic, debit from the company's bank account into their bank account. And so as we're building our business, one of the things that we felt was really important is that we have the best service in the industry. We are better than everybody else because we care more, right? We used to say our payroll or your payroll is our passion, right? That's what we're going to do, whatever it takes to get it right. And so how do we bring that to life? Well, interestingly enough, a couple of years into the organization, we were going into New Year's weekend. And so New Year's weekend is a bank holiday in the United States. It happened to be that it was a Monday. So that meant that the banks were closed Saturday, sort of Saturday afternoon, Sunday, Monday, and then Tuesday is the first time you'd have money. It's also the beginning of a month in January when people's rent and other bills are due. And so we had a number of companies that were doing their payroll for the first of the month. And we ran their payrolls. They have to do it a couple of days in advance to make the electronic payment system work. And we had about 1,000 companies in our system. And somehow or other, I don't know if it was our fault or our bank's fault, doesn't really matter. it got messed up. And so 1,000 employees didn't get paid on the Friday going into the bank holiday weekend. They didn't get any money in their accounts, and they thought they were going to get money. So here we are, it's 10 in the morning. We're starting to get calls. We're starting to get more calls, right? Because 1,000 companies, towns, however many employees, you can imagine the phone lines. And we're trying to figure out what happened. But at the same time, we're trying to figure out what happened. We're trying to understand, is it going to resolve, or what are we going to do? And we also have this kind of moral obligation that, like, how are people, some people live a lot of people live paycheck to paycheck. How are they going to eat? How are they going to pay their rent? How are they going to pay for their kids, whatever they have to do over this 3-day period till we can get them any money? And so by the time we figured out what was really going on, it was probably about 4 in the afternoon, into the New Year's holiday. And so we had a choice. We could have said, hey, this is the best we can do. We did our best. It was the bank's fault. Sorry. Or we could try to fix it. And so what we literally did is we held every single employee, including all of our technology developers, all of our accountants, all these people that never talk to customers. And we handed everybody a list of basically 30 customers and the phone numbers for those employers. And we said, start calling them and tell them what's going on and offer any way we can to help. We'll wire money to their employees right now. Whatever they need, we're there. We are not going to let them be in trouble, because again, a lot of these employers, their employees don't know we exist, right? They just know their employer didn't pay them, which is not a good way to keep your employees happy. And so what ended up happening, sorry, it's a bit of a long story, but what ended up happening is that rallying and culture around we always do the right thing for our customers permeated through the organization. We ended up getting everybody sort of, it's cold here in Chicago, winter jackets with our logo and sort of the date and a little comment about we deliver, right? And the people that had those jackets in the company became like the legend because they were there during the crisis. And interestingly enough, after the fact, we looked at those, I think it was 860 customers. How many of them were with us a year later? It was a greater retention of those 860 customers than our core customer base. And that sort of lived as a legend in the company. And I bet if you even went there today, even under paychecks, and you found some of those folks, you talked about it, people get it. And so when somebody has an issue, the frontline people are told that we'll support them, told to do the right thing, or asked, make sure they do the right thing, and they have the power to do it. And they've seen through example that it matters throughout the company. And so they do it. And that's what I mean by putting a culture in place that drives forward.
Fantastic. I think that brings a lot of clarity to the issue. But staying with this issue, now I'm going to talk about the people. So people that start and the people that complete. So if you look at companies like Apple, Apple had jobs until he unfortunately couldn't continue. So that's like continuing. Google brought in Eric Schmidt, when the company was growing. Travis Kalanick of Uber, for some reason, it seems as if the company outgrew his capability to be that kind of a size. And then Larry Ellison of Oracle has been running his own company until he decided to take a back seat and focus on maybe racing boats. So this is, there is a view among many investors, right, that the skills required to succeed as a startup CEO are very different from those needed to run big companies. This is why at a certain stage, they bring in professional managers with strong operating backgrounds. Google is the example I gave. On the other hand, some, notably the founder of Anderson Horowitz, which is a venture capital firm, the opposite view that the founder, as custodian of the vision, should be retained but supported to grow into the position of leading a bigger company. Your views on this, number one, and how easy is it for most startup founders to rise to the occasion of leading vastly bigger companies? A mouthful. I hope you got it.
Yeah, no, I mean, I think it's certainly the age-old question, right? And as you scale the business, can the CEO scale with the business, or does the CEO need to be changed out. And there's a series of things in this. One, I don't think we talk about as much, which is there's a little bit of, does the founder really want to run a much bigger business? And a lot of that has to do with, if you think about the role of the CEO in a business, it evolves materially as the business scales. And so what Larry Ellison is doing, well, at least before he started sailing, right, is a very different role than what he did when he started the business, right? And, you know, even if you look at Bill Gates from Microsoft, right, he was a coder. He was actually writing the software, very engaged, to now having, you know, hundreds of thousands of employees in a very different role. And so a lot of that has to do with how good an entrepreneur is and how willing they are to change their role and to change their behavior as they go. And in some ways, that a lot of it has to do with this sort of evolution, I think, between, as a business grows, you work in your business. And as the business, and at night, you sort of work on your business. And as the business grows, you start to be able to separate that a little bit. And you've got people that are actually working in the business, doing the day-to-day. And the CEO becomes above that, sort of working on the business. And so their job is the business versus in the business. And that's a real different balance. And it's a very different place for an entrepreneur to be in. And quite frankly, it's different skill set often. And depending on how fast your business is growing and how quick you are as a learner, if you want to take that on, there's a challenge for the business between, I can take the time to have you get educated and learn. And a lot of the way you learn, quite frankly, is you make some mistakes along the way, versus we're growing so quickly, or there's so much pressure on scaling that I need to bring in someone who's seen that movie before. So simple example is, if you're growing your business and you've got a call center type operation, and it's early on, you can have someone who is just a smart utility player who can learn the call center. And as that business is scaling, if you have time and capabilities, I would bring in the smartest athlete I can find. And in 6 months, they're going to be pretty smart about how to run a call center, but they're going to have more headroom and more ability to scale. If my call center is, you know, on fire because I've got too many calls and I'm growing, or I've got operational challenges or whatever, and I don't have the structure and processes to handle it, I need to bring in someone who's seen the movie before, who's experienced. And what ends up happening is you go from very general cross-company roles into very specialized roles. And that has a lot of challenges, especially for an entrepreneur who wants to be sort of across everything. And so as business grows, their role has to grow. I think one of the biggest challenges, and I think the toughest part of any business and the biggest risk to any business, is the first time you change the founder for a new CEO. And how you do that is critical. And there's so many businesses that don't make that transition. And there's a few that have done it really well. And it's interesting. There's a great blog article by Reed, the founder of LinkedIn. And he talks about how he built the business, Reid Hoffman, how he built the business early on. And then it was time to transition to somebody else because he just wasn't into the day-to-day operational things of being a CEO. And he went out and he hired somebody who had the perfect sort of corporate background, and it didn't work. He was a year in and he realized that it wasn't working and he had to make a change. And he said part of that was his fault because he didn't support this person and give them the legs to be the leader. He was still there, so the transition didn't happen. But he also talked about how you've got to have a vision moving forward of where the company's going. And he almost talks about that transition from existing CEO to new CEO, or existing founder to new CEO, is really about a second entrepreneur, a second founding. And he considers Jeff Weiner, who took over for him, who built LinkedIn hugely successfully, as a founder. He just was a founder of a different stage. So
very interesting. Very interesting. So what I picked on is work in the business versus work on the business. Point in time. What is Elon Musk doing? Is he working in the business? Is he working on the business? What do you think? Should he
did you?
No.
Yeah, and did you say? I'm sorry, I didn't hear. Is it Elon Musk? Is that what he said?
Yes.
Yeah. So he's got two businesses, right? He's got Tesla and he's got
SpaceX.
SpaceX. Yeah. So I think he's working. I think he's working on the business. I don't think he's working in the business. And he, you know, a lot of his role is the vision of where the business needs to go. But he's not, I mean, he certainly shows support that he was on the factory floor when they were having delivery issues and other pieces. But more so, I don't think he's that involved in the day-to-day, or he's certainly able to pick his head up and say, where do we want this business to go? And what's the vision for the business? And that's really important. But I don't think he's actually going in and delivering that. I think he's hiring some really good people to do that.
Fantastic. I hope the entrepreneurs that are listening are taking some notes, because sometimes we get trapped in our passion. If our passion is coding and we are the founder, we still want to be coding, but then who is looking at the vision and where the business should go to? Let me switch gears and ask you about something you said in an interview which you gave. That particular interview, you said that companies move from being startups to larger organizations. They must also realize that they are transitioning from a product business to a distribution business. Shed more light on this. Sure.
And I think I said it in context to something that was more of a technology business, a software business. But I think it would still apply for a lot of manufacturing businesses. But if you think about it, when you're building a business and you've got a software for managing, I'm involved in a company called Big Time Software. We do practice management software for accounting firms, for engineering firms, help them time track and manage their stuff. What you end up, what ends up happening is you build this product, and you can have 10,000 users or you can have 100 users, right? And it's not about building more and more of that product. You certainly have to maintain it. But the business shifts from, hey, can we build this thing and does it work? To how do we educate the world about it and how do we get people to use it? And one of the ways that this happens over and over again is that's now a distribution problem. How do I get to 1,000, 100,000 businesses? And so a lot of times what you see are these larger software companies, IBM, Salesforce, Oracle, SAP, who buy this product technology that's built, that's got a few thousand customers, and they take it and they stick it into their 4,000 sales reps around the world, and boom, all of a sudden it's a huge organization. And so they can pay a premium to acquire that business because they have the ability to distribute it everywhere. And so as an entrepreneur, as you're starting to scale, you've got this challenge of, how do I get scale? How do I get more people aware of it? Which is marketing and sales often. As we all know, growth is expensive. So if I want to go from 5 salespeople to 30 salespeople, that's a lot. I got to have some capital to do that. I have to know how to do that. And then I have to figure out the execution around that. And so I have this choice between, do I scale and grow and drive distribution myself, which might be a little slower and more costly, but have a better value in the end? Or do I plug in either through partnership, where I'm going to give up some revenue to Salesforce or IBM, or do I let them pay a premium to buy me now and stick me through their existing distribution channel? And that's what I meant by that.
So partnership, from what you have said, is extremely important.
Yes.
And it's also possible to sell your business and work in the business after it's been bought. All right, so let me go into scale, the journey scale. So I'll quote you again in something that you said, that scaling is cash intensive. Scaling is cash intensive. Could external cash too soon or too much of that impede the journey to scale? Question number one. When is the right time, and what questions and self-check analysis should be at the top of the founder's mind before actively soliciting external funding if the business is already generating a decent cash flow?
Yeah, and I think that's the key point at the end, right? If you're already generating some real cash flow, you've got a business. And so now the question is, what do we do next? And I think the first thing there is some introspection that I think is really important between just for the entrepreneur, right? What do he or she want, right? Are they trying to build a nice lifestyle business that will, fund their family and their activities and give them, whatever the benefits of a more leisurely life, if you will? Are they trying to create the biggest business they can? Are they trying to change the world? Are they trying to create more jobs for other people? Right? What is it? Are they trying to create wealth? Right? What is it that they want to accomplish? And I think having a sense of what it is you really want to accomplish and you value will help drive you in that decision, because tell me which side of the argument you want me to make, right? In terms of let's keep growing with our cash and we'll grow slower versus the other. I do think there are some other things to look at around, the industry dynamics where you're playing. Oftentimes we think that we're in a sprint, a race, and we're actually in a marathon. And so if you're thinking about your business is going to grow at the industry is going to grow at a sprint pace and it's all going to be sort of locked up in 24 months, you're going to make very different decisions than if you're playing for 5 to 10 years and how you think about that. And I think the biggest challenge, a lot of people assume they're in a sprint and they're really in a marathon in terms of how you balance that. And then the last thing I just say is as an entrepreneur, a lot of us like to be in control.
Yes.
And take on other investors. You got a partner now. It's like having a spouse and they get a say. And, it's you got to be okay with that.
So staying on the issue of raising money, just resonating with what you said about whether too much or too soon. In the company that I founded, CWG PLC, which is now the largest security and technology sector on the Nigerian Stock Exchange, we were approached 3 times for investors that wanted to bring in money. And we refused 2 times.
Yep.
The one time we took the money, $10 million from Aureus Capital, was in 2009. But it seemed that it was a worthwhile wait. Why? Because the global financial crisis hit in 2008. Everybody was treading water, as we were. So that was about the perfect time, and that really made a difference to our company. I think if we had taken the money much earlier, we would have probably wasted quite a chunk of it. So you mentioned something about time, and I'm just collaborating the view, that time is important. But let me ask you this question. It's still on raising money. It is not uncommon for entrepreneurs to find themselves having to choose between one, pursuing growth through cash generated within the business, bank loans, and even possibly investor funds raised externally on the one hand, or selling out to a bigger, richer competitor, which you talked about, backing on the owner to achieve the scale that they're looking for. What are your thoughts on the pros and tough compromises each option brings?
So again, I think some of this goes back to what is it you as the entrepreneur, what do you want to accomplish? And then I think the second thing, which is related to that, is what's the right thing for your business long term, right? If you are your business, maybe it's the same answer. So I'll give you a real simple example, but at Sure Payroll, when we were about 10 years in, we had outside venture capital money that was, would like a return, but our business was growing nicely, that they were doing okay. So there wasn't a lot of pressure, if you will, to say, hey, we have to exit, because they knew they were growing the value of their investment every year. And we looked at it and we said, we're 10 years in, and what does the business really need? And for us, the issue was we had this great product. We were scaling. We were literally growing based on whatever capital we could raise, right? We didn't have any more outside money. So every dollar of cash we generated from the business, we put back into growth. And when we looked around, what we realized is our growth could be so much bigger if people knew who we were. And the problem was not that we didn't have a great product. As a matter of fact, when we competed against somebody, we won more than our fair share. The problem was when the decision was made, we just weren't even at the table because they didn't know who we were. And so we looked at it and we said, okay, that's a marketing challenge and that's going to require money and time. And we don't have it. And so we can continue to grow at this pace over time, or we can try to have a much bigger business, but we need to have that money. And so when we looked at that, it became really clear that the answer for us was what was right for our business, if we wanted the business to live on and continue to grow, is that it needed external capital. It needed more money. And so that's what forced us to run a process and put the business in the market, if you will, either to take some more equity from another private equity firm or a strategic sale, which is where we ended up with a strategic sale. And what ended up happening is our new owner came in and put a lot of money into the business on marketing, and the business is significantly larger than it was back then. And we would be a much smaller business today had that not happened. And we wouldn't be serving as many customers, helping as many people. And so that's sort of an example of how you think about it, versus other people might have said, listen, I've been at this for 10 years. I've got a lot of my net worth tied up in it. I'm not liquid. There's too much risk to my family of all this effort I've been putting in. I want to take some money off the table. And so I'm going to take some outside capital to take money off the table, or I'm going to sell and go find something else to do because I want to take some risk off. It depends a bit on what you want to do as an entrepreneur and what's the right thing as sort of as a steward of this business you've grown.
And thank you for using short payroll as an example. It always brings it home more vividly. It's a pity we're almost coming to the end. I have one last question for you, Mr. Alta. Okay. And I think this is more looking for your advice. So what matters more to the success of a new or growing venture? Is it the market it is competing within, or the management team that has been put in place to operate the business? It could be any other thing, but what do you think?
Right. And there's an old saying, which is sort of, is it the horse or is it the jockey? Right. And, you know, it's interesting. If you'd asked me this question 10 years ago, I would have told you it's the jockey, because a smart management team will move the business wherever it needs to go to be successful. Today, I think exactly the opposite of that. The most important thing, and I'll give you an example, to me, is the horse, the market you choose to play in. And then you should have a good team, but the team is a notch below the market, right? There's a saying, rising tides lifts all boats. And so the example I'll give you, and I didn't mention it in my background, but I did a stint for 2 years in the consumer e-commerce world. I ran a company called the Tie Bar. And so we sold men's accessories, primarily ties, neckties, pocket squares, socks, things like that. And it was a very profitable, very growing business. And that's a great place to be in some ways. But the sort of fashion world is a very challenging market, and it changes very quickly. And so what's in today is out tomorrow. And so we were on this sort of more formal dress environment, and there was a lot of dynamics in the US as to why that made sense. And then this new fashion world of athleisure came in, where people were casual, right? None of us are wearing ties, right? That's a problem when you're running a tie company, right? It's like running a buggy whip company when the car comes out. And so you have to pivot into a better space. Well, that's really hard and takes time. Why would I take on that challenge when I can be in a market that is big and growing and going to be there anyways? And so to me, I would like to have a good, talented management team, but pick your horse and then ride it.
Thank you very much, Professor Michael Alta, for sharing these insights. We really deeply appreciate your coming to Nigeria for the first time.
Yes.
And we look forward to having you again after the pandemic.
Thank you. No, I'd love to be there in person. And thank you so much, Austin. It's a pleasure to meet you, and very impressed with everything that you've done. It's really very exciting.
I'd like to hand over at this point in time to Dr. Ogo Okiti to close us down.
Wow. What an amazing conversation. Thank you so very much, Austin. And Michael, please, whenever you want to come to Nigeria, you are most welcome. I mean, I've thoroughly enjoyed the conversation. It's like just being in the back, in the classroom, just behind you, you know, listening and seeing how companies start up, scale up, and of course, become great companies. and for hosting. Obviously, always a pleasure listening to your experience. Having built one of the best companies, technology companies in Nigeria, we appreciate your time, your energy, your insight, and of course, the experiences that you have shared this afternoon. We are most grateful. And let me extend that sentiment to all our speakers before now. I mean, I've listened to very young entrepreneurs running medium-sized companies, coming from different backgrounds, fitness, beauty, technology. I mean, it's just been awesome listening to you all. So I thank you. As I've been introduced, my name is Kitty. I'm the managing director of BusinessDay, and all I'm just here to do is to close this amazing conference. And as I close it, I would just reiterate what I think are the four messages that have been reinforced for me today. They are not new, but they have been reinforced in a way that I believe is worth repeating. The first is that an entrepreneur must solve problems. I mean, if you don't solve problems, you can't grow the value of your business because if there's a problem that you solve, that people actually reward. So we must always solve problems. Most times when people think of entrepreneurs, they think of, oh, I want to make money. No, that is not the idea. The idea is, what problem am I solving? Because when we solve problems, then the reward comes. And obviously, the second thing is that you must provide excellent services, goods and services. So you must always watch your product and watch your service and ensure that they are excellent, they are competitive. And of course, the third one is to build a strong culture of excellence. If you listen to all our speakers here today, they've emphasized that one way or the other. You must continue to build a strong culture of excellence, because if you don't, then your businesses may just you may just run out of ideas, and of course not be able to meet clients' expectations. Of course, then the business is on the way out. And finally, the fourth thing I want to highlight this afternoon is collaboration and partnership. Entrepreneurs must collaborate, they must partner. That message has been reinforced, and it rang through all the conversation also this morning and afternoon. But having said that, those things are in a way within our control. But there are two things that, well, they are not completely in our own control, and that's what I call the macro and the industry conditions. The macro and the industry conditions. So if you listen to all our speakers today, where they are talking about their companies, what they have done, what they did not really say is also how they have to juggle with the macro conditions. And if we don't do that successfully, then we don't have great companies. That's just basically what it is. And of course, for Nigeria, we have peculiar macro and industry conditions, which we must continue to adjust to. So I really hope that you have learned one or two things this morning. So I thank you all. I thank all our speakers this morning and this afternoon. And for our audience from wherever it is that you have joined us, and for those of you that may even be watching these video clips after this, I really hope that it is worth your while. So I thank you all for joining us here in Business Day, and I look forward to catching up with you again in one of our other conferences. Please have a great afternoon. God bless you. Have a great Business Day afternoon. Bye-bye.
No panicking, the worry they end today. Setting at the packaging, it cover you all the way. Whether na e-learning, whether na business, yo. Working is digital, working from home, you covered with TZ, yo. Streaming and surfing, gaming and chatting, calling unlimited. I'm living the life cause I get TZ, yo. Yes, sir. TZ, connecting. I'm living the life cause I get TZ.